Howdy. Welcome back to Dion Talk. Looking forward to Tuesday. I enjoy these live streams. I don't know, I have to look at the time. What is this, the 43rd week? So not quite a year yet. I've been doing these. And my goal is to do these live streams as long as the questions last. So I'm going to talk on my subject at the beginning, but if you can get your questions into the comments, my goal is to get to as many tonight as I can. The topic I want to cover before I get into the questions is the biggest mistake that happens when setting rents. And there are several mistakes that happen. Some are easy to fix. Some are frustrating because it seems like they'll take an entire mind shift change to get this, what I think is the biggest mistake, to actually shift. I posted on social media that this was going to be the topic tonight, and there were some good guesses. One of the guesses was obviously not using the binder strategy, which was a very obvious one, but I'm not arrogant enough to think that's the biggest mistake that people make. I think it's very useful to use the binder strategy when setting rents, but I don't think it's the biggest mistake people make. I don't see one of the other questions, the answers. Figures that I would lose it. There's a couple mistakes that people make when setting rents that aren't the biggest ones, but they're the first ones you would think. When you're a brand new, I don't even want to say investor, but when you just start looking at investing and you think, I want to buy real estate to reach financial freedom, because there are three main paths. There's dozens of other paths, maybe hundreds, but there's three main ones. You can start and grow a business to the point where somebody else runs the day-to-day. You can invest in stocks and use the 4% rule, or you could buy real estate. And there is different ways to get into real estate. Some people will do wholesaling or flipping. And to me, that's like a job. It's kind of episodical. If you stop working, the money stops coming in. So what I've chosen is buy and hold real estate with long-term rentals. You can also do short-term rentals. But when it comes to setting rents for long-term rentals, and you're brand new and you haven't even started out yet, we think, how much is my mortgage? My rent needs to be more than that. It's logical, but it's kind of a mistake. We don't get to go, if my mortgage is $1,000, I need my rent to be $1,500 so that I can pay the mortgage, set aside some money for repairs and maintenance, and then make some profit. Because what if the properties around you are renting for $700 for the same size property? You might want or need your rent to be $1,500 a month, but you don't get to set it there. The place would sit empty. That's a new mistake. So that's not the biggest mistake that people make, because as soon as you do a little research into this, that's not how you can set your rents. One of the larger mistakes that's made by investors, especially if they've purchased their properties 10, 15, 20 years ago and they've held them since, is they quote the 1% rule. They say, in order for a deal to be good, the rent has to be 1% every month of what the value of the property is. So if you buy a $100,000 property, the rent every month needs to be $1,000. That's 1% of $100,000. If you buy a $400,000 property, the rent needs to be $4,000 a month. Not one of my deals ever came close to the 1% rule. Some of them might not even be the 1% rule after 7 or 8 years of owning the property. They might be. I haven't done the math on that. But here's the flaw with the 1% rule. The 1% rule was really useful in 2011, 2012, maybe 2013, when we had the housing crash of 2008, putting millions of properties on the market. And we had to filter through good and great deals to figure out the best ones. The best ones would have the most cash flow. Then we would filter through all the other things that we would have to determine whether it was a good deal or not. So the 1% rule kind of made sense. Does your market currently today have millions of properties for you to filter through, or thousands, maybe even not even hundreds? And the 1% rule doesn't take into account things like, are you in New Jersey where the taxes are $16,000 a year, or are you in Washington State where on a house it can be $1,000 or $2,000 a year? That's a significant difference on a monthly rate of almost $1,000. What if you have a $500 a month HOA or no HOA at all? Right? The 1% rule doesn't tell us how to set our rents. Here's the biggest mistake. And I want to say thanks to Phil for the super chat to let YouTube know that this live stream was happening, that it might share it with more people, that somebody likes the content enough to do that. Thank you for lucky number 43. This mistake is frustrating when I see this, because I'm in social media a lot, Facebook, BiggerPockets forums. I'm trying to interact with other people who want to reach financial freedom or invest in real estate. I give really bad parenting advice and really bad relationship advice, but I give good investing advice, or advice that's helping people reach financial freedom in a very simple method that's not very complicated, easy to reproduce. Doesn't mean it's easy. To me, it was easier than working 50 hours a week, but it doesn't mean it's going to be easy. The first 5 years are probably the hardest. But a lot of people will talk about, here's the question. This question sparked this entire reason for this video. An investor will ask on BiggerPockets or in the Facebook groups, the Real Estate Rookie group, the official BiggerPockets Facebook group, they'll say, how would you set the rents for renewing the lease on a tenant who's been a good tenant? So many uneducated people who have probably never been a landlord, or people who somehow got this in their head, and I'm going to prove that I think it's uneducated, even though there are some people watching who probably do this and think it's right. You can think it's right. It's good to have different opinions. But then I'm going to have my reasoning behind why I think this is flawed logic. A ton of people will pounce in and go, if your tenant's good, don't raise the rent because you'll lose the tenant. In 10 years, I've had 4 tenant turnovers, even though I raised the rent either every other year, or you've used the binder strategy last year and had over 20% rent increase across the board. 1 tenant purchased a house and 1 tenant moved out of the area. I have not ever had a tenant move out and start renting in the same area. So raising rents doesn't make tenants leave. How you raise rents might make tenants leave. So that's where not using the binder strategy could be one of the bigger mistakes. It's not the biggest. This is the biggest. People will say, how do you adjust the rent for a good tenant? They leave it alone. And then the virtue signalers will jump in and go, did your expenses go up? Because if your expenses don't go up, you're a criminal for raising your rent. Meaning, if your principal, interest, taxes, and insurance cost you $1,000 a month, and your taxes and insurance go up, then you're justifiable in raising your rent to compensate for that increased expense. If your expenses go up, you can then raise the rent and you're not a criminal. But if your expenses don't go up, don't you go raising the rent, because inflation doesn't matter. The dollar's not weaker. Area average rents didn't go up. You don't need to be competitive with your local rents. None of that matters. What's your expense? So I understand how it feels good to say, provide a good rental, take care of it. You're profiting enough. So if your expenses don't go up, don't you try to make another penny, because it's not going to cost you more to put on a roof, and it's not going to cost you more to pay a handyman because wages have gone up. It's not going to cost you more for materials next year when a window breaks. Like those expenses that you can't see in your principal, interest, taxes, and insurance that did increase, that are going to cost you more because inflation's a thing, means this is why you should raise your rent. But here's my reasoning why I see that as a flaw. To the virtue signaler who's out there going, don't raise your rent unless your expenses go up. Show me the landlord who goes, my rent is $1,000 a month and my mortgage payment is $700 a month. I set aside $100, so I'm making $200. Okay, so if your taxes and insurance go up and now your mortgage is $800 or $900, you're going to raise your rent to $1,100 or $1,200. Totally follow the logic. Okay. You own your property long enough and you pay the last payment on the mortgage. You've owned it long enough, you've paid extra, you did a 15-year mortgage, you did a 30-year mortgage, whatever it was, you get to that last payment, you pay off the mortgage, the final payment. Congratulations, it's a good position to be in. I have one paid off property. When your expenses go down because you no longer have a principal and interest portion of your payment on your mortgage, show me the landlord who instantly drops their rent $700 a month. Your expenses don't set your rents. If things cost more, that doesn't mean you are then allowed to raise your rent. It means you would need to in order to make the same amount of money, but your tenants don't care what your expenses are. If your expenses mattered, a paid off property in that scenario would rent for $500 or $600 a month, and a property with a $700 mortgage would rent for $1,200 or $1,300 a month. That's the biggest mistake with rents. People thinking the only time you can raise the rent is when you've had an expense increase that you can see right now. Wages have almost doubled in the last couple of years. People were paid $75,000 a year to sit at home on unemployment in Washington state and had to be bribed back into the workplace, to where pretty much everybody starts at $18 an hour or more at almost any job across the board. Jobs that used to start at minimum wage are starting at $18 and $19 an hour. Your handyman is going to cost more. Your contractor's employees are going to cost more. The pandemic creating all of the supply chain issues is going to create problems. Things that you can't tangibly see, your taxes and your insurance going up, are going to impact your ability to run a successful business if you don't raise the rents. I'm not saying jack it up to area average rents or above, or as much as possible. Maybe on a flip, when you do a bunch of rehabs, you try to get the best. But one of the reasons why the binder strategy works is because tenants are still below area average. They're still getting a good deal. They are happy tenants. Happy tenants don't trash your place. Happy tenants don't trash your property. They don't leave. So the next time you see someone on social media say, did your expenses go up? Because if they didn't, you can't raise the rent. You're a horrible, evil person if you do raise the rent and you can't show an expense that caused that. 8% inflation, using the flawed method that they're using for setting rents. They're saying they use owner equivalent rents. They don't go out and look on apartments.com or Zillow or Craigslist or Trulia, Facebook Marketplace. Correct me. They're not going and saying, here's what rents were last year. Here's what they are this year. They go to homeowners who might never in their entire life own a rental and say, what do you think you could rent your place for? Like, that's a way to set rents in the inflation number. So inflations are much higher than 8%. And people are saying, if your specific expenses for property taxes, one of my properties, it went down this year, 6 of them, it went up. So I think it balanced out. But the one that went down, or the property I have where I paid off the mortgage, it didn't go out and immediately lower the rent by the amount that I was paying in principal and interest. That would be stupid. It's kind of like the rockets and feathers concept with fuel. If the cost of oil goes up, fuel prices go up. The commodity that's used to create the fuel, not even the supply chain issues and the wages to make the fuel went up, but just the oil goes up, fuel goes up. So it's immediate. It goes up like a rocket. As soon as oil goes up, fuel prices go up. They're not going to be selling at a loss. Fuel prices come down like feathers. They float down because oil prices drop. The only thing that lowers fuel prices is if you have fuel stations around yours, if you own it, and they start to lower the price to beat you with competition, you will lower yours to keep it, down to the point of the cost of oil. Rent is the same way. Expenses going away doesn't mean rent would come down, and you don't need expenses for your rent to go up. If the area average rent goes up, your rent should increase too. Using the binder strategy, in my opinion, is the best way to get it because the tenant asks for the increase. You get it up to just below area average rent at the tenant's request. Happy tenant, low turnover. You're not a slumlord. You're making enough money to maintain the property. You're being competitive. And one of the things we're seeing right now is rents are going up faster, not because of wage increases, not because of the wage increase of the 5 to 7% that you're seeing when people talk about wage increases, which is record wage inflation. It's because of the working remotely. Somebody that was in a city paying $3,000 a month for a crappy little apartment can move out and rent your house for $2,000 that was rented for $1,200 last year. They're saving money. That's what's setting area average rent. So if you're not paying attention to that, you're falling behind. And expenses that will also be going up, like the cost of your handyman, the cost of materials, the cost of contractors, and things you can immediately see like property taxes and insurance are going to cost you more in the future. Don't go anywhere. I'm going to end this video. because I want to cut that out and make a whole nother video on it and leave it playing by itself. I hope that explains what I think is the biggest expense, the biggest mistake with setting rents. And there were some good guesses on social media, people thinking that not using the binder strategy, or I wish I could remember, my brain turned off when I couldn't find it. Not sure why I couldn't find it. I think Beth had the closest guess. And I can't find it for now. But let me get to the howdies. I see that Tom did a super chat and said, why not stocks? Surely expenses are less. The barrier to entry to stocks, it's weird, Tom. The barrier to entry to stocks is lower. You can invest in stocks for like $5, right? You can get on an app, put $5 into a stock, buy a fraction or whatever, or stock that's worth that much. So to get into real estate, even with a zero down product like Bank of America, zero down, zero closing costs, no mortgage insurance, like all other things. If you're one of the people who qualifies and you're in the right area to qualify, you're either going to have the expenses of the immediate repairs, or you're going to have the expense of moving. So, and almost even a free rental, somehow you acquired it with no money down, is going to cost you more than $5. But the barrier to entry to financial freedom is significantly less in real estate than it is with stocks. The 4% rule. A lot of people reference the Trinity study, which came out after the 4% rule was established, and it studied the 4% rule for decades. If you want to live on $100,000 a year, you would need to invest, was that $2.5 million? I think something like close to like $2.5 million in order for your 4% to be $100,000 a year. In real estate, in a decade, I've invested $320,000 and the cash flow is $168,000 a year. Actually, it's more than that because I've had a couple rent increases. So $300,000 to $400,000 invested, 6 figures in cash flow, not counting appreciation, principal pay down, and the fact that it's tax-free because of appreciation and principal pay down, but depreciation, meaning that I haven't paid a penny in rental income tax. Or invest $2.5 million in stocks for the 4% rule to give me maybe a little more than half of the cash flow that I have now. Easier to get into stocks, easier to reach financial freedom, less money needed to be invested. I don't know about easier, but less money needed to be invested. And I've never woken up and looked at a chart to see the value of my properties. I have occasionally gone out and said, let me make sure I'm on top of very average rents so I know what to do this year for rents. Not thinking of what my expenses are, but looking at what the area average rents are so that it can set my rents. A lot of other reasons for stocks. Hard to house hack stocks. How do you call Jeff Bezos and say, hey, let me live in one of the Amazon terminals to house hack? It's possible. But ultimately, to me, I think somebody should invest in something that excites them. If you're not excited, like stocks don't excite me. To me, they're ethereal. Like they're just as real in my head as crypto is. Maybe a longer track record, but I'm not the CEO running the company that I'm investing in that can make the decision or cause the lawsuit or do whatever, let's say, whatever happened with exercise company. I want to say Pinterest, but that wasn't it. I hate my memory. Did I ever tell you about my memory? Peloton. They have a lot of behind the scenes issues. And then they shut down all in the United States. There's no more employees in the United States, whatever their deal was, whatever the change was that you can't control, that stock drops. Now, yes, if you're in a well-diversified stock portfolio with an index fund, it's not like that one company is going to greatly impact you. But I've never woken up and gone, wow, my rents are down 20% today. Home values could go down, sure, but rents haven't gone down since we started tracking the data. So that excites me to invest. If real estate doesn't excite you and stocks do, it's not that I want people to invest on emotion. Don't invest because you're excited. But if you're excited about an asset class, you're more likely to stick to a plan when things get rough. In real estate, my brother who came on and did my live stream with me today, which I appreciate every single comment on the video that I was able to copy and paste and send him a screenshot of to get him to come and do that because he was super nervous. He even said he's camera shy, which is funny because he is the center of attention. Came out here. The first few years of investing are very difficult. But when you look at someone who has reached financial freedom with rentals and you see their rental, the repairs are done, the tenants are in place, they maybe even use property management, or they have their management down like I do to just a couple hours a month to run 16 units. That's attractive. That's exciting to me. There's nothing about stocks that's exciting to me. Let's say somebody bought $10 in stocks and now is a billionaire. Doesn't do it for me. Same thing with crypto. If you bought crypto when it was less than $2 a Bitcoin in 2006, 2007, when it was coming out, or whatever the timeline is, and you now have hundreds of billions of dollars, doesn't excite me. Wouldn't care. So it's not that I buy a rental because that rental excites me. It's the asset class, the slower, sticky price, the fact that rents don't go. It's easier to diversify. You can buy an index fund, but the entire market can go up or down. If you buy rental properties, like I do, small multifamily that are at least 10 miles apart, close to several different economic drivers, a pandemic didn't even impact my rents. I've never had a later missing payment in over 10 years. You can diversify your tenant base. I have about 1/3 military, 1/3 Section 8, 1/3 working or retired. So an actual longer pandemic, a stock market crash, prolonged government shutdown, even that wouldn't stop my income from coming in. Making work optional in less than 10 years while not making a lot of money. I started making only $17 an hour. First couple of years, that's about all I made. I might have got up to 19 or 20 before my career started to take off with the company I was at. But those first years were out of the way. I saved to get into a house hack. That increased my savings. All of the wheels were rolling by the time the income started coming in. So that's why not stocks. Expenses are less with stocks. You would think. I think that your, first off, net worth is a fictitious number, which are a lot more focused on net worth with stocks than I am. If it wasn't for me making a video, a couple of videos now on what is my net worth, or what happened first, $1 million in net worth or $1 million in debt, I wouldn't know what my net worth is. I might have figured it out because I did a personal financial statement for a DSCR loan a few months ago. But even that, I looked at the numbers and I was like, that's about 3 times what I thought it was when I checked a year ago, and I haven't done anything different. Kenzie, howdy. Tony, howdy. What type of rental agreement do you recommend for house hacking a bedroom? I plan to rent other 2 rooms and live in a 3rd room. So that sounds like a solid plan. I would recommend watching some of Todd Baldwin's content here on YouTube. He's got a BiggerPockets episode. He's got a really great YouTube channel. He's way better at editing videos than I am. But he rents by the room, and he probably has a lot of suggestions outside of just what kind of lease would you use that might make that go better for you. Renting a room, renting an apartment above the garage, renting a duplex, renting an ADU, any form of house hacking, to me is the same when it comes to leases. Exactly the same lease. It's just you'll have a section that explains what portion of the property they're renting. If it's the house with the B at the end of the address instead of the A at the address, or if it's the room left of the kitchen, or the common areas and this room, or common areas and this garage or this apartment above the garage. The same lease. So some states have a landlord-tenant resource page where you can go. That's where I got my original leases. Washington used to have that up. I haven't seen it recently in a couple of years. They're kind of state-specific and maybe even county-specific. If I was renting, which I wouldn't, in Seattle, Washington, my lease would be very different than in Pierce or Thurston counties in Washington, where I do have my rentals. So know the local laws to determine whether your leases need to be different or not. You can become a BiggerPockets Pro member. I think it has to be a 3-month or longer commitment. You can't do the month to month, but on 3 months or longer, you have access to leases that were made by attorneys for each state. The one thing I do recommend is something I got from my brother, which can be in one of the videos I do with him going forward in the future, which I hope he comes back for, is talk to your attorney You don't have to retain them, but you can ask them this question. I retain an eviction attorney in case I ever need them. It removes one element of stress. Kind of like everyone is afraid of the 10 o'clock at night, you have a plumbing issue with your tenants. Tenants, termites, and toilets. Nobody wants to hear about a plumbing issue at 10 o'clock at night, right? Have you gone online and found plumbers or contractors in your area that do plumbing work and have a couple of those numbers saved in your phone that have an emergency 24 hours? If you do that, if you have that plumber like in your phone, the stress level of a 10 o'clock call at night goes from all this, oh, I don't know what I would do, to I make the phone call, my reserves are set there to handle this, like I've planned for this to happen eventually. Stress goes away. So retaining the attorney did that for me for an eviction. But ask that attorney, is there any verbiage that you can send me that I can put in my lease that will make your job easier if I ever have to go through an eviction? That little blurb, because that attorney works in that local court system, they'll know what would need to be in your lease to give you the strongest position for going to court. So that would be my answer, Tony. Basically, by the room, by the unit, by the rental, by the whole property, same lease, just with an area of the lease defining what they're renting. Brian Beck, howdy. Thanks for the comment, Brian, on my brother's video. Appreciate that. Like I said, I'm going to send him screenshots of the videos. He wasn't sure that people would even want to hear his story because he's not using mortgages. He's not buying $400,000, $500,000, $600,000 anythings. But he reached financial freedom and has 10 paid off rentals and has had the life for the last 8 years that most of us would want. Ninja Vanish, howdy. Ninja Vanish. Paula, howdy. Lumberjack landlord. Matt, the lumberjack landlord. I already answered this question. Binder strategy. Yeah, you were one of the ones that was a close thing. I think it's a mistake not to use the binder strategy. I don't think it's the biggest mistake. I don't think enough people even know that it exists, but I'm trying to get it out there. Laura, howdy. Thanks for hanging out. Appreciate it. Chester, howdy. Good evening, Matt and everyone. Dawn, howdy. Happy Tuesday. Jared Franklin, howdy. Taking over property, I have a hard time raising rents immediately. How do I overcome that limiting belief? It's a great question. There was a period of time where one of my daughters worked at the truck driving school, and working in the office. It's a sales position. People come in and you have to tell them, look, I'm going to sell you that this is a great idea, or I'm going to sell you that this is a bad idea. If you walk into a truck driving school and you say, I just got a CDL, which cost me my city jobs, or I just got a DUI. So I lost my city job and I want to get a CDL to get a job. Our employee's job was to sell you on not getting your CDL. That would damage the school. If you got a CDL while you just had a recent DUI, it would be hard to get you a job. So it is sales, whether it's selling you to do something or not to do something. And her problem every single time was, how do I bring up the price? This is a service, right? People pay to go do this. Eventually, she actually went off and ran a couple of other stores doing something, came back with some amazing sales skills. But that was a hurdle for her to get over in the beginning, is how do you bring up price with somebody? Tenants know when they're renting that rents can go up. One of the biggest fears of renting is that if the property is purchased, rents can go up so high you can't live there anymore. Tenants are kind of expecting that. So don't do that. My binder strategy makes it a conversation that I plan on having, but not for about 2 months. For 2 months, I want to vet the tenants because we didn't get to run their credit, check their work history, look for their eviction status. They're already tenants. People call them inherited tenants. They could be not historical tenants, but there's some other word that means that they were already existing. They're expecting the rents to go up a bunch. I wouldn't do that. But a lot of tenants haven't looked at buying a house. They haven't looked at what prices are. They haven't looked at renting a rental in the area. So if you're familiar with my binder strategy, it's here. Just go on YouTube and look up binder strategy Dion Talk. There's a 5-minute video which explains the idea. There's a 20-minute video that's broke down in classroom format that literally explains the nuances of the hows, the whens, the whys, the psychology behind it. If the tenant asks you to raise the rent and then thanks you when you acquiesce, it's a lot easier to sleep comfortable that night because you didn't raise the rent. You had a conversation, you educated the tenants on what their options are, and they chose the one that made the most sense. Because as the new owner of a property, the most logical thing for you to do would be to kick the tenant out. Just be cold and callous and calculating and just kick them out. rehab the place, get the best rents, right? Don't be that jerk. Some people do that. It's their business model. But that's not my goal. I don't want to displace a tenant, so it helps there. I also am lazy. I don't want to do a rehab. So talking to the tenant, explaining to them what area average rents are, giving them the actual physical 3-ring binder, that's why they call it the binder strategy, and letting them kind of choose where their rent goes to. There have been times where I've looked at a tenant and said, in my head, I think if I get a $100 or $200 rent increase this year, not a 5 or a 10%, but just $100 or $200, that would help a lot. And the tenant comes back with, how does $360 more sound? Can we do that? That would be great if you would agree to just $360. Even then, it's easier to get around being the big jerk to fix the rent. But remember, take care of the place. Before I talk about anything about a rent increase for those 2 months while I'm vetting the tenant, there's some things that I also do to help that conversation go better. I'll put in schlag-coded locks, eliminating the need for keys. Tenants really, especially in my Class C areas that I invest, really like having codes and no locks or no keys. Makes my life a lot easier since there's 2 exterior doors in 10 years. I've never had a tenant lockout, not once. I'll put in motion sensor LED exterior lights, which adds to the safety, reduces the cost to the tenant because LED is cheaper than bulbs. And it lets the tenant know, because I also asked the question, is there anything that you would fix if you owned this property? Giving the tenant a chance to point out. And some people would think, don't do that because they might ask you to pave the driveway or add a bedroom. But actually what it is most of the tenants in my case have asked for really small things. Like one had a remote control didn't work for the fan, which was too high to reach. And another, it was like they wanted a screen door because it gets hot and they wanted to have the door open. Little fixes like that, spend $100 or $200, super happy tenant. The binder strategy goes a lot better. Tenants ask for a bigger increase. So if you can get them to ask for the increase, it's a lot easier than you going in, being the new landlord and just putting your fist down and going, here's your new cost. Chester. Howdy. It's a logic problem. Work backwards from 10% off area average rents. Then fold in principal, interest, taxes, insurance, and then set aside money for repairs, maintenance, vacancy, CapEx, and property management fees. Yes, it is reverse engineering to figure out if a deal's worth pursuing. Once you have the deal, a lot of people will say on those things, these are my expenses, so I have to or shouldn't raise the rents. And it's not really how it works. Because like I said, if that was the case when you paid the final payment on your mortgage and you no longer have principal and interest, the landlords would drop the rent by $500 to $2,000, depending on what their mortgage was. Tom, howdy. And again, thank you for the super chat and the question. That was great. Hey, y'all, howdy. Howdy, Dion. Glad to be here. Chester, what's going on, Tom? And congratulations on winning last week. Awesome. Chester, inflation goes up, hence expenses, and sometimes, but not always, income goes up. That is true, not always. Especially the people, Chester, I've never asked your age, but if you're around my age, we were raised in a generation where longevity at a job, employment, consistent employment was rewarded with climbing the corporate ladder and getting raises and having, like in the military, you have that chart. What is your rank? How many years have you been in? That dictates your worth. But the studies have been done in the last 10 to 20 years where the people who change jobs every couple of years are significantly making more money than the people who stayed at one job, because competitors will pay more to bring you from a company than your company will pay to try to keep you. Tom to Chester, hi and thanks. I've been sick, but I broke through today. Awesome. Especially as a driver, it sucks to be sick. I just realized your super chat is going to beat my follow-up question. That's okay. It's all good. Cashflow Johnny Ramirez. Howdy. What's up, real estate freaks? Chester, Tom, oh man, glad to hear you're on the mend, though. My little nephew was sick as a dog on his birthday. That's no good. Here we go. Tom, Chester, do you have a real estate meetup you get to attend? Want to go to the one we're working on around Mount Airy? If you don't increase rent, you lose out on increasing your savings rate to buy your next. Your savings rate, your repairs, your rebuilding your reserves. I have a friend who has over 30 rentals, and most of them hasn't raised the rent in 10 to 20 years. Doesn't need the money, seems great. But as roofs get replaced, and roofs now are $8,000 to $15,000 instead of $4,000 to $6,000 when he bought the place. It's an eye opener that, hey, that $600 a month rent for that house that should be $2,000 is not serving the renter or the owner very well because the funds aren't there to repair it. Chester, owner equivalent rent is totally useless as a legitimate metric. I totally agree. Yet the Fed uses it and weighs it heavily in its factoring for CPI. Most current elected officials don't want inflation to seem as high as it is. What's weird, you see a lot of posts on, right now we have a kind of one-sided government. I'm not going to say the colors because that gets you demonetized now. I'm not going to say the letters that represent either side, but one side has three parts of the government. So you would think, since inflation is so high and all of the issues that we're having with fuel prices, which is part of inflation, that you would see a massive shift in who's in office in November. And then Alaska votes in somebody from that side to replace somebody from the weaker side. I don't know that we're going to see any significant changes, not for a while. Keith, howdy. Yes, property taxes went up 10% and insurance went up 10%. I raised rents 20% to maintain cash flow. Good. So raising for expenses makes sense. I would also look and see what your area average rents are doing. In my area, they went up around 30 to 40%. My tenants asked for 20 to 28% rent increases, so I didn't keep up, but I didn't have to do much rehabs or tenant flips. So what is going on with area average rents to determine what should happen with your rents? Let's say your property taxes went up 10% and your insurance went up 10%, but rents in your area went down by 50%. You were renting for $1,000, your expenses went up 10%, and all of a sudden rentals are $500 a month in your area. Could you raise it 20%? Would your tenant stay? Would you feel right doing that? Area average rents dictate rents. No, they haven't gone down 50%. They haven't in most markets. I think if the .com crash hit Silicon Valley, yes. If the car manufacturers all move away from Detroit, yes, you can have a local market that's impacted that way. But if you're investing diversified, spread out properties with different types of tenants, it takes a lot more cascading dominoes to fall for that to be a part of the factor. Chester Williams. Yep, invest 2.5 million to have returns of to be able to have the 4% rule support your lifestyle. Because the returns on average are 10% per year, which gives you the 4% to withdraw, normally 3% to keep up with inflation, and some money to pay for the taxes. Tom, FYI, Dan Bird rocks. I've been paying attention to what he's talking about, the market economy. I've been making gains to add to my savings. Risk means I could lose my gains and capital. Peloton. Thanks, Chester. My first live stream talks about why I don't do live streams, because I have some memory issues, which I do. Chester, you were disappointed you missed the Dion and Dan live. That's okay. I might have him back. I definitely want to have my brother back. He's got some topics that I haven't done. He has got, I want to go to his shop, tool for painting doors. It supports the door like on hinges and lets you position it in different ways so you can paint both sides. You don't have to do it in 2 stages. He's done that. One of his properties he purchased with a court steps sheriff sale. I want to talk about what the timeline and chronology on that was like, but it's self-managing out of state. His properties in California, he might currently, but for years he didn't have property management for that. We talked about it in my video with my brother today. That's a great reason to be able to take a trip to California. I think I missed a super chat from Surf Marco. Thank you very much. I appreciate that. I don't see a question with it, so I appreciate the support. Surf, if you have a question, Make sure you put it in there. I'll make sure I get to it. And Tom, you liked the brother video and have questions for him. Yep, I definitely want to have him back. Maybe I should invite him on a Tuesday at 4 p.m. and have him hang out here for an entire live session because he's got a mountain of information. He's done full rehabs, a lot of experience that I don't have. He's used home equity line of credits. He paid off his properties. He used an entirely different form of debt structure. I think on all of his properties ever, he's had one mortgage. And he actually used me in that as a house hack. That was right after the Marines. I was homeless for a while. Then I moved into one of his rentals, and then he purchased a rental. We used my access as owner occupied to get in there. This was, decades ago. But like for him to share how all that worked for him way before I was an investor would be great. Julie, howdy. My brother very much appreciated your questions. They were thoroughly entertaining. And it's actually something that comes up with us a lot is my older siblings say that I was my parents' favorite because I was the baby. I was the youngest of 5, even though they had 13 somehow. I'm the baby. Not all together. But I look at it differently. I think my parents were parents when they had my brother. My parents had given up when they had me. So, Aldair, howdy. Greg, howdy. Tom, I have roommate lease and separate regular house lease. Individuals living together require some extra rules to follow and some different ones. They follow the same template, Tom, but I have almost unique leases per property, explaining if the utilities are different, explaining the yard maintenance requirements, explaining, I'm trying to think if there's other things that are different, but each one, before I go to do this, I only have 16 units. It's easy to keep track of that way. If I had 50 or 100, I might have to systematize that a little better. But yeah, definitely different for each one. Peyton, howdy. Had a $300 raise on my apartment. I couldn't leave faster. Yeah, couldn't leave fast enough, I bet. The 2 years between renting out my house and buying the duplex, I was in 2 different apartment complexes because I moved into one. And they just sent me a letter saying, hey, we're raising your rent. And it didn't matter what it was. I was like, no, I'll find a cheaper place. Could have been $5. I don't even remember. Just the mindset of some tenants. If you're not really tied down to the location, a rent increase. Had they come to me and said, hey, here's the apartment complexes around here, what they cost, and it's too much work for an apartment complex to do, they would have said, what do you think is fair? I probably would have suggested an increase. Michael Smith, howdy. Made it to the live. Nice. So this is every Tuesday, 4 o'clock. Hopefully you can make it again. And happy to answer any questions that come up. I am doing more and more live streams during the day as random pop-ins, and then you can watch them later. A lot of them I do on my phone, so I don't have the option of answering questions. Today I did a live stream on what I think are the benefits to the Bank of America, 0 down, no closing cost, no mortgage insurance, no credit score check loan option that is out. Miss Independent, howdy. Should have been what I called my daughters. I'm looking into a duplex, house hack, awesome, but the tenant is running a daycare out of one of the units. It's month to month, fortunately, not sure how to feel about it. Is it zoned? Is it a legal business? Are they the tenant that you would move out to owner occupy, or are they the other tenant that would stay? There's a few things missing there. I think, well, I know I have one tenant that's definitely running a business out of his property because he's probably selling illicit materials, which is fine. He pays his rent and I don't care. Yeah, the daycare thing though, you've seen, I don't know if you watch my content, but I do some videos on these slides. I live not too far where I can actually literally walk up to these slides that go down like a 300-foot wall back and forth. But there's always these little demons. I mean, people call them kids. Sure, there's kids, but they're demons running around on the slides. Terrifying, scary. Not sure how I would feel about that either. Have you gone to the property to see what it's like? What is the noise level like? What is the traffic level like? What the cars coming and going, what the kids drop off and pick up? If you're going to live there, that's a consideration. Is it side by side? Are there garages between? That's my preferred type of duplex to buy because you have less noise issues. The plumbing is better when the properties are apart. I mean, that would be a factor. If it was over under and they were, like the herd of kids was above you, probably not what you call a gaggle of kids. Probably something else they call. What do you call a group of kids? I don't know. Group. Yeah, there's a lot to consider there. And then Ryan sent a super chat. I appreciate that. Better late than never. You made it. Howdy, Ryan. Glad you showed up. Appreciate the support. Check to see if I am missing. If you had a question, we will get to it if you do. Dawn, I didn't realize you did the live with your brother. Is it available to watch or have I missed it forever? No, I do lives and then leave them up. I did 5 videos when I made the channel and I took them down because wow, they were terrible. But since then, I don't think I have removed a video. I've accidentally uploaded one that I was intending to edit that I took down and edited and put back up, but I've never taken one down. So it came out today. It says retired at 50, has a picture of my brother on it with a great shirt for retiring early. And it actually literally says my brother in the thumbnail. So that's up and it'll be up for as long as the channel exists. Chester, your age, the ripe young age of 40 when I started investing. I had made it to 40 without ever having $1,000 in the bank. So cool. Michael Smith, question. What's your feel of the economy? How do you see the energy problem in Europe affecting US real estate and trucking? So I'm definitely not an economist. Not even can I could give the respect to the channel that knows what he is and calls himself the uneducated economist. That is awesome. Howdy, Matt. We'll give you a second to log in. Answering this question with Michael really quick. Matt, howdy. The energy problem in Europe, I think a lot of times when we have instability in other countries, whether it's Europe or China, you see a demand growth in the United States because people look for a place to park money and don't care if they cash flow. If you're thinking of a currency losing value, like recently we saw the first time in my life that I can remember, probably happened, but remember I'm uneducated, the dollar and the euro or the pound or whichever Europeans uneducated, I went to school in America, they don't teach us this stuff, were the same. And I remember it being like $1 to 2.7 of whatever they had. Like it was super weak. So I think we see more demand here, just like Canada. For almost 3 years now, Canada's had a ban. They had a 2-year ban on foreign investors that they just a few months ago reset for another 2 years, trying to stop demand from outside because that props up artificially prices because the rents can't support the price, but the investors that are just parking capital don't care.
True.
Matthew, the lumberjack landlord. Howdy. How are you?
I'm doing awesome. I was just figuring out what all my expenses were so I could figure out how much I need to raise my rents.
Exactly. And if your expenses stayed the same, don't you raise the rent?
Yeah, I literally got, so we had, if you don't get a binder strategy text from me, it's because I don't want you to stay.
Exactly.
We sent 7 people rent increases and we just sent them the letter because Ashley's like, what if they don't renew? I go, God willing.
So I like the binder strategy. I like having happy tenants.
Yeah.
I like not having to do a rehab. I like all of that, but I also like money.
Well, I was going to say, you had look at your relists, right? Like
My 2 relists that I just had, I mean, they were
massive,
80% on one.
Yeah.
Right. And that's a binder strategy probably would have been 40%. So I got double what I would have had the tenant stayed.
Yeah.
And the other one I think was like 30 to 40%, I think, on just a relist. But I don't do like you also. I have never pulled out cabinets or put in countertops. I have stuff that it's safe, clean, functional, gets me the rents. I probably could do rehabs and even get more,
Mhm.
but the lazy kicks in.
Yeah. It's we kind of, it's another level of diversification for us is really what it is. So we do not have a standard anymore that we say every unit that we have is going to be exactly this. Every unit that we have is going to be exactly the same color and same scheme, but we're not going to do gut and redo kitchens. We're not going to bring down to the studs and upgrade all the wiring to, to brand new Romex and do a new panel with AFCI and GFCI breakers. We're not going to do that in every unit. In some units, it makes sense to do. Usually it's when we're getting the unit vacant. Usually it's when I'm buying it because the landlord had a nightmare and was just like, all right, we're it. But for the pricing for a lot of the stuff that we've been paying for now, the gut rehab doesn't make sense, not for what you're going to get for the return on capital. And so all I'll do is make sure that we still have, great units that are clean and functional and have some extras in them, good amenities. But at the end of the day, we don't enforce our model into the property no matter what, regardless of what the return on capital is, because that's where a lot of guys go boom, boom, and there's nope, you don't understand. This is my model. Yeah, I understand you're going to be broke soon. I'm going to be buying the stuff that's cash flowing from you very quickly. So yeah, diversification. Another way to diversify is having multiple different asset classes in the same market of different quality.
Yep. A lot of people, there was a question earlier from Tom, which I appreciated, was, why real estate, not stocks? So many people will say, well, you can diversify in stocks. You can do an index fund. You literally own a little piece of 500 properties or 500 businesses or whatever.
Mm-hmm.
There are ways to diversify in real estate that make it to where you could sleep like a baby.
Yeah.
Like the amount of things that would have to happen to actually impact your cash flow on a significant level.
Yeah.
Cash flow would be the least of everyone's problems.
Oh, I wanted to talk to you about that too. So what was really interesting was you and I had talked a lot about cash out refis. We talked a lot about cash out refis. And so I had to fill out we're getting ready for tax season already. Shoot now. So it's September, so we have to make sure that we're getting ready. We do all this stuff all the way along, but we do a final review kind of end of September, beginning of October to say how's the year look and should we take some money and reinvest? And what was really interesting was I actually am going to be able to reach a new level of lazy. And the reason that I can is because my mortgages are higher because I refinanced and I have less money I have to go out and spend.
Interesting. My taxes are so much less than yours. Like, not the amounts. I mean,
yeah,
I might spend 3 hours a year
on your taxes.
Yep.
Yeah, we are not that lucky. Yeah,
I just go through the different ways I can spend things, and I make sure I didn't miss anything on my one spreadsheet that I send to the CPA.
Sure.
That's it.
Yeah, I think so. Ashley and I were actually talking about that last night in prepping these docs. And so we've had in our 22 years, so we've been together for and married for 15. So I did it for 7 by myself. And what's really interesting is life looks a lot like what you talk about when you're not heavily acquiring, number one, and meaning like 3, 4, 5 a year. But number 2, the biggest change is when you're not rehabbing. That's the biggest change. The thing that, to your point, the thing that really adds a lot to time invested is tenants. It's a turnover and it's tenant turnover. And so for us, it's nice because, we have some tenants that have been with us for 10 years, 18 years. The guys, 18, 20 years, a couple of people have been in the buildings. But what I think is really interesting is as we looked at it, we just said, yeah, the reason that we're going through this is because when they leave, we take the time to upgrade the unit and then get that extra rent like what you've seen. But we don't do that across the board. So it's good to be kind of large enough to be my own mutual fund at this point, which is nice because it's like we touch so many different things. So it's good.
Cool. We've got some good questions coming up here. Michael Smith.
Yeah.
Question. Can you describe the biggest challenges to Cody and Christian's multifamily strategy? Utilizing seller financing seems better. What am I missing? When you can acquire it, seller financing is the goal that we all think is better.
Mhm.
The way that Cody is investing as a 21-year-old who does not have a W-2 job, who has now well over 100 units, very easy, not easy, very attractive to go out and build the relationships, develop the strategies to find owners, to communicate with them, to try to learn from them, and at some point buy from them. Like it's all great. All of my deals are from the MLS. All of them with traditional lending through a lender. I've never hunted someone down, developed a relationship, found their properties, sent out mailers, found the owners, figured out what their equity position was. Yes, their strategy, Cody and Christian's, better. Mine fit my, and there's a question coming up too down later from Tom on, was it hard to invest while working full time? Were some obstacles in the beginning? It wasn't hard to invest working full time because I looked at the MLS 20 to 30 minutes a day. I told my agents exactly what I wanted to make as offers, and rinsed and repeated. If you can learn Cody and Christian's strategy and you can develop the debt structure, because remember, with seller financing, a lot of people think interest rates higher or I have a balloon payment. Nothing exists in seller financing until you educate the seller on how it works. So maybe don't set up balloon payments and maybe don't pay any interest. Like you have all kinds of options there. Their strategy is definitely better, but it's different. If you're working full time, it's hard to find the properties. It's hard to develop the relationships with the owners. If you watch Cody or Christian talk, they are salesmen. They have people skills. They have psychology behind the sentence structure in the way that they talk. Educate yourself on that. Great strategy. Yeah. So I'm not saying mine's better or worse. I'm saying mine fit me better.
Mhm.
And we definitely have different goals.
Yeah, a little bit.
Buddy 3. Buddies. Section 8 demanded my rent increase this year. Please provide some advice to get them to increase the amount. The person with the walk away ability has the power. You have a lease between you and the tenant. You have a contract between you and the housing authority. They didn't deny you anything. They can't deny you anything. They can tell you, we won't renew our contract. And so you have to tell the tenant, I'm not renewing with you because they won't. And when you communicate firmly like that, Section 8 is more likely to play ball. How I did it, they told me $1,800 was the most they would pay for my rental. They told me, here's our website. This is what we have listed. And I said, here's the comps. I used an email version of the binder like Matt, the lumberjack landlord, does, sent it off to Section 8. And I said, here's the comps I used to justify my rent. They were more. They were $2,300, $2,400. And Section 8, I said, I just want $2,200. They agreed. That doesn't mean it'll work in your area. I have one county where they don't play ball at all, so I don't invest there. I literally say, hey, I would love, half my units are in this county. I would love to provide some to Section 8 here, but F you is my answer to them. The other county, that they told me in email writing, that's the most we can do. Then I did the work for them. I said, here's the comps that you can take to your boss and say, in order to keep this client, we have to come to where they are, and I'm not even going to the area average. So do you have any other strategies there, Matt?
Nope. We will take those units away. It's not a right, it's a privilege. And we tried to work with them and were not interested. And they said, we won't go to that number. And I said, I understand. And then within an hour, I had both units. I sent Section 8 a copy of the letter that I sent to both units, and I had that letter dropped off that day. It's just, it is what it is. It's just business. And so at the end of the day, I got the call back from them saying, is there anything that you can do? And I was like, there's nothing I can do. You're choosing. I didn't choose, you chose. So we actually have one where somebody was lazily put into a 3-bedroom unit with a 1-bedroom voucher. The landlord was lazy. Section 8 was lazy. The tenant was lazy. Everybody was lazy in that equation. Tenant wanted what he wanted. They wanted something bigger. Section 8 was like, yeah, sure, if you can get it, like that's fine, but not thinking at all. Somebody's eventually going to own this unit and they're going to want a 3-bedroom voucher in that unit because 1,100 versus 1,800, that's just math. And so when it was all said and done, we had the conversation and we said we followed our contract, which is in our state, I don't know if it's the same in yours, it's called a HAP contract, which is 60 days notice. We give them the 60 days notice because and they said, well, is there any way we can stay? And I said, yes, $1,800 a month, you can stay.
Yeah, so check your local laws. It's very different and nuanced in each state. Here in Washington State, we have 20-day notice to not renew.
Okay.
But it's 90-day notice if it's going to be a rehab, or no, if you're buying it to owner occupy. And it might be 60 or 90 days if you're going to force out for a rehab. Say, look, it's going to be uninhabitable, you have to leave. Like there's a few different reasons, and I would literally go to Google and find out what was current to figure out what was the best route to go.
Yeah, New Hampshire, it's 30 for rehab. It's 7 for non-payment, but that's not a Section 8 thing. But the HAP contract actually says we have to give them 60 days notice if we're going to on rent increases, as well as on the rehab piece. So it defaults to 60, even though state law is 30, it defaults to 60 within the HAP contract, which is what you have to sign to provide that housing to Section 8 or a housing voucher.
Cool. Mm-hmm. And then James J, thank you for the support. I greatly appreciate the super chat and the support of the channel. Let me know if you have a question. I see Surf Marco asked a question down here, which we'll probably get to again, but since he sent a super chat earlier, do lumberjacks ever really retire? Doesn't seem like it.
So real quickly on that. So that was another reason we're putting together the financial package for the accountant, just making sure we have our T's crossed and I's dotted. And so what was really funny is, I don't think I'm going to do a video about this. So I'll just say it right here is I way overspent this year. I just I want to make sure that when I retire, that I don't have to do any roofs, that I don't have to do any heating systems, that I don't have to do any major foundation projects. So this year, the goal in setting myself up to retire, because I'm not an infant and I don't want to make the decision on a Tuesday and be out. And so Ashley's like, we got to make sure that we're planning this out. I said 100%. I was like, because I have been known to pop off, and that's where the infant thing comes in for me, is I can walk in and just go, I don't want to do this anymore.
I thought that was actually an attack on me because it was a Tuesday. And I just said, hey, everybody, today's it. Very infant-like, but I was having the best day.
No.
So I said, yep, I'm out of here.
No, it was totally on me. No, totally. Because I will act like a petulant child sometimes. That's just the way it goes. And so I planned everything out. So everything that we've done this year has been, yes, growing the business, but setting it up for the future. And to your point, one of the things that you and I talk about is, when you're acquiring properties and when you've got 43 roofs and you've got, 105 heating systems, got to make sure, I don't want to have a bad year where I got to do 5 of those and 2 heating systems and be like, oh my word, that was just a tough year. Cause once I'm done, I'm done. I'm riding off into the sunset with Dion. So
that's the way my brother was talking to me today after our video.
Yeah.
He did 3 roofs this year and he's got 2 planned for next year.
Yeah.
And he's 58. So he's like, probably the last time in my lifespan I'll be touching those roofs. So I'm going to get them done before I get at a certain age.
He doesn't know, right?
He does. He gets up there I'm trying to keep the language clean. He does it himself.
Right. That's what I'm saying. Yeah. So roofs were always out for me. I'll do anything else, but it's got to be roof line down. So I did pretty much everything on any property, but I would not do a roof. Roofs are not for big things like me. When they fall off roofs, they break like Humpty Dumpty.
Well, he calls me and I don't mind going up and helping him set the skylight or whatever I'm going to do. But just the idea of doing the work yourself, there are people that will do that. So Tom was asking the question of, was it hard to invest while you were working full time? What were some of the obstacles in the beginning? I think Matt's better to answer that question. since you're still doing that.
This is for the infant comment that wasn't even aimed at you. It was yeah, I mean, I worked my butt off. Like, and I worked, 70, 80 hours a week in an executive job. I worked up the corporate ladder. I've got a bunch of initials in my title now. And run divisions and run companies and run products. So yeah, I worked my tail off, but that's where the creative financing thing was more difficult. Now there's a lot more social awareness around creative financing and seller-based financing. That was like finding Bigfoot 15 years ago, or even 12 years ago. That just was not a thing. It was so small. And so now it's much more of a thing, and that's great. But I didn't have time to be forming relationships with other real estate people when I was working 70 or 80 hours a week, because people don't like getting phone calls at 11 p.m. at night or 5:30 in the morning. Except for Dion.
For no reason whatsoever sometimes.
Yeah, exactly. True story. So it was really hard. You have to be really disciplined with your time. For me, I'm grateful that my wife's kind of more of a morning person. And so by like 9:30, she's tapping out. And so I told her, literally, we had a conversation one time where she's like, when did you start that? I was like, thankfully you go to bed early enough where I can start a whole new life. And I started another company. And so that's what I did. I started another company while my wife was sleeping. And I said, part of the reason I did that might have been just so I can have a story that I started a company while we were sleeping. So it was good. But yeah, it's hard. Tom, I know, is making the sacrifice. I know a lot of people that watch you make that sacrifice. But yeah, to grow to the level that we've grown and done the number of transactions, like one of my buddies that I talked to yesterday said, Matt, you've done more transactions this year than I've done total in 10. And I was like, oh, you picked up on that.
So you've done more transactions this year than was my entire investing career's goal to do.
Yeah.
Like I wouldn't have wanted to do that many.
No, it's a lot. It's a lot.
And that would, I mean, in a decade, like not just in a year.
Yeah.
So knowing your end game is really important. And here I'm going to nerd out on you for a second. If you've ever played like an MMORPG or a massive multiplayer online role-playing game or something like that, you don't just start playing.
Right.
You figure out what is the end. What are you trying to get this person or this character, this avatar to end up like? Then you can find the path to get there. Real estate's the same way. If you don't know what your goal is, you're going to be chasing 5 rabbits and starving. You have to figure out what's the goal. Which rabbit do I chase to get there? I see Dividend Dave, my hero who lives here in Bellingham, and I'm hoping to see one more time next week at our local RA meetup, which Dave has, I believe, been moved to Wednesday night. I have to check. I don't think it's this week. I think it's next week, Wednesday night. There's a Facebook event created in the Tacoma Phi group for it. But Dave just purchased a duplex and is moving out of the state. So congratulations on that.
Awesome.
Yeah.
That's great. It's awesome. Congratulations, Dave. And thanks for the super chat on Sunday.
Yeah, no, I appreciate that. And so does Matt.
Yeah, I did. Yeah.
Chester to Tom, Mount Airy is far, not going to lie. I actually learned of one down in Waldorf area. I'm thinking of checking it out. Local REI meetups are great. Surf Marco. Howdy again. Been watching your great videos and read some books, including One Rental at a Time. And the audiobook, 15 Conversations with Real Estate Millionaires, literally should be coming out soon because it's completely done, recorded, edited. It's gone through all the checks with Audible to get put out, and they came back with 2. I had to create files for intro credits and outro credits. And so I've done that and edited the ones where they were in, and it's been a bunch of steps to jump through. So that should be coming out soon. What courses do you recommend that are more step-by-step for extreme noobs, especially finding deals? So Surf Marco, you read One Rental at a Time. Have you taken the One Rental at a Time course? That is a course where several experts like Matt, Millennial Mike, there's so many, me, right? Matt, the mortgage guy, right? Like experts have put in so much content in there that as content is added, you continue to get it. Matt is making a course, The Lumberjack Landlord, and it's not about so much finding deals. It's about content that he does. I'm eventually going to make a course, and it's going to be more step-by-step for my type of strategy. And since I invest in one area, I don't have like choose a market stuff. I won't have that kind of stuff.
Yeah.
All my deals are from the MLS. So I'm not going to talk about mailers, driving for dollars, the sheriff stuff. YouTube University is where I'd start, search for specifics like that. But if you haven't taken the one rental at a time course,
Yeah,
I would suggest doing that.
it's the best bang for the buck there. I mean, it just is. You've got almost 100 hours of training there by, I think it's like 13 or 15 experts. I mean, and then if there's something there that you really like, then deep dive it. Like, that's one of the things that I thought about it was there's a bunch of stuff in here that I would never do, but I'd go through the training to see if it appealed to me at all.
Right. I need to
Didn't
go
cost me
through
any extra.
the
Yeah.
whole course. Right. Exactly. And then Nicholas Massey dropping a $20 super chat.
Good guy.
That'll pay for my next haircut. I so appreciate that. Oh, you should have seen some of the questions today with my brother. It was great. I think
We're
Julie.
gonna do the Al Bundy test on your head.
Yeah, exactly. Thank you for that, Nick. I don't see a question, so if you have one, make sure. Oh, here we go. Hey, fellas. Cool. It came in before. I found qualified tenants for my new property with 2 houses on it. Dion, extra thank you for your feedback over email. Awesome. So
Very good.
I'm going to put my email in the chat really quick here. Sometimes people have a question and you don't want to throw it out there with how many people are watching right now. 93 people are concurrent viewers. I'm not sure how many are on right now. You might not want 93 people or the 1,000 who are going to watch the video in the next week to see the question. There's my email. Feel free to send it. If I ever don't answer you for like 3 days, I get a few emails. Please send it again. I won't be offended. I just missed the first one. Happy to answer questions via email. I don't know your market. I don't know your goals. I don't know your assets. I know from my perspective, based on what I've done, here's some suggestions I could make. Sometimes they help, I hope. Sometimes, like if you want great parenting advice or relationship advice, that's not going to come from me. But thank you very much for the super chat. It's greatly appreciated. Here we go. Michael Smith, question. Thank you. Since retirement, how are you filling 9 to 5? How are you keeping busy, productive? The kind of recurring joke is when you retire, you are going to wonder how you had enough time to work. I did a YouTube channel on how to reach financial freedom by investing in real estate. Maybe somebody watching is into fly fishing and can make a YouTube channel and get to fly fish after you quit the 9 to 5. Maybe you work on old cars. Maybe you want to Twitch stream your game or whatever you're doing. You'll have something like that you can do. You start to realize that you might know more people who don't have jobs than you think you did. My brother's biggest concern was he retired at 50. He's been retired for 8 years now, but everyone he knew was still working. So in the last 3-4 years, I took a month off every year and traveled with him somewhere. Well, I'm not the only person he knows. So we know a few people who could do that. So you might start scheduling your trips and time around other people's vacations. Filling the 9 to 5, quote from Calvin and Hobbes, there is never enough time to do all of the nothing that you want to. Yeah, not just YouTube. I went and spent a week in Beth Traverso's cabin, which I'm going to be making videos with her next week. I think I have her talked into coming to the slides. Believe she'll do better than Millennial Mike did. That has to be a thing.
I was going to say, it can't be hard.
No. The best thing is, Mike Zuber says every day is Saturday, and I say every night is Friday night. We just had Labor Day. So yesterday, when this video is being recorded, it was yesterday. A lot of people got to go to barbecues and got to hang out and do stuff. And it was, yes, it's a holiday. That's great. But it's just a day. Like today, the same thing. My brother came over, I recorded a video. I went down to the slides and recorded a video. I'm doing the live stream on Tuesdays. I'm still testifying in a couple of court cases, expert testimony. I've got a couple depositions coming up, so that's kind of fun to schedule. I'm scheduling some times where I communicate with people. I'm trying not to create a business where I take phone calls to help people solve people's financial stuff. I don't know that that's a business I actually want to do. I understand why Michael Zuber goes, here's the course, here's the charge for a half an hour, and that charge for half an hour is several $100s, like $300 or something like that, because he kind of doesn't want people to do it.
Right.
Because if I wanted to make a couple $100s an hour, I'd go back to the truck driving school and be the president. Like I could do a job.
Mm-hmm.
So I don't know how that's going to look. If I do a course, it's still an if. I'm not even sure. I want to help people, but it's just the $5,000 to even just set it up.
Yeah.
And I don't want to over monetize it to try to make money. Like, the idea isn't to make money. I kind of like the super chats. It's great. No one's going to say no to money, but the idea that you're doing this and it's showing YouTube, hey, this is good content, share it with other people. That's the part that I think is cool.
That's right.
So, Matt, how are you feeling your 9 to 5?
It's exhausting receiving all the pink Panthers I receive.
Right.
I'm working. It's about as much fun as everybody else that's watching this live stream.
Did you see I included you and Millennial Mike in the Pink Panther?
I did.
Okay, good. That's
yeah,
a new change.
Yeah, no. Oh yeah, no. I was still insulted. No, it was good. And then I answered something inappropriate that we can't repeat.
Speaking of that, the next comment is from Tom saying, "Let my brother go uncensored," because
oh yeah.
You
might need to flag that a couple times in YouTube.
Right. No, yeah. And it would be interestingly uncensored because Dan, my brother, Dan and David, they're actually like best friends. And Dan's worked at the school for like 10 years. So Dan came over to do the video and I said, hey, we're going to do a live, but you can't cuss. Immediately out of Dan's mouth, I don't effing, and it wasn't abbreviated. So I thought, okay, cool. At least with the live, I can go in later and chop out sections. But watching it live, don't watch it with kids in the background if my brother or Dan is on, because the YouTube is not their thing, right? This communicating and filtering and training yourself to say, what the Fiji? So that the right word comes out. Don't be shocked when theirs is unfiltered. Alizette, Zapita, howdy. Cheers, I look forward to this every week. Me too. Especially since I don't have the job to fill the time in the 9 to 5. I look forward to this. I look forward to the questions. Part of the benefit to the questions is it helps me and Matt sit back and go, we've never talked about that. Like that's a thing I would be confused about if I hadn't done it 20 times. Let's make a video.
True story.
So, and then there's the Ryan super chat. Thank you for that. Chester, that would be awesome to have a 4 p.m. live with Dan or David. But make sure you have plenty of alien sponsored water on hand. Some may call it the truth serum. So I don't know that Dan would ever, he'll watch my 10-minute videos, but he will never watch like a 1 to 2 hour live stream like this. It took, I want to say half a case, of course, to get him to sit. And he had 3 while we were doing it was only like a 20-minute video. It's like I said, this is not David's or Dan's world. But Alizette, thank you very much for the super chat. I really appreciate that. I look forward to this every week too. And I do look forward to sometimes like my brother or Matt. I think one of these days, if possible, I'm going to have Millennial Mike over here actually site and do this, because one of the things I've done with a couple of other content creators who weren't doing lives with guests is to have them sit down and show the 17 plus steps you have to go through to get the 2 platforms to work together. Easier in person.
It is not. Yes. It is not conducive.
No.
Excuse me.
I'm putting Matt to sleep on my own show.
It's 8:19 on the East Coast. It's been
and you do have that job.
So, and we that, and 2 kids were in school today, and then it was. The problem with this holiday week is you have 5 days worth of work to get done in 4 days.
So here's something the question earlier, how are you feeling the 9 to 5, right? I got up this morning and I knew my brother was coming over. So I had my morning workout. My brother shows up. Between my brother's video and this live stream, afternoon nap. That's why I'm not yawning in the middle of our
Yeah,
thing.
no deal. Yeah, no kidding. Oh, brutal. Samuel comes back from school and I said, "What's your favorite part of the day?" He goes, "I got to sleep on a cot."
Nice. I need a cot.
I was like, "What?" He goes, "Yeah." I go, "You don't take naps anymore." He goes, "I take a nap on a cot every day at school." I was like, "Is this what I'm paying for?"
This is what your tenants are paying for.
Yeah.
Our tenants pay the property taxes.
Yeah.
Or you got private school though. Yeah.
Private schools.
Oh,
Yeah.
there you go.
Yep.
Nice.
It was the yeah. Mhm.
Okay, fair enough. Then Dividend Dave with another super chat. I thank you for jumping to the top here, Dividend. My 17-month-old wants to know why Matt's not retired.
I can make it very simple for him or them or her, all of them above. The main reason I'm not retired is because much like Dion, for if you don't know Dion's story, he was, I'm going to retire between tomorrow and 3 years from now. And then after the company got through a thing it was trying to work through, he did it successfully, like he does all of these things, perfectly navigated, got the answers and got them on the other side of it. Lot of respect for Dion. That's why I think we're cut from the same cloth, mine being much larger. But I think that's one of the reasons why Dion and I get along so well is we're just like those guys, right? Which is we finish, we take care of it, we check all the boxes, we make sure that it's done and taken care of and wrapped nicely with a bow before we decide that we're going to exit stage left. And so that's really the only reason for me. Financially, I could have done it. Honestly, I could have probably done it 10 years ago. Easily could have done it 5 years ago. Yeah, I could have done it years and years ago. Having kids, enjoying them, but I work from home. And so I'm not on the road anymore. I used to be. I was 100,000 miles plus a year every year. I don't do that anymore. So I'm at home with my kids. So when I wake up in the morning, I have kid time. I get to walk out of my office and have lunch with my kids. I get to walk out of my office and see my kids for dinner time. So it's a very high quality life for me. And so I'm ready to leave as soon as I finish the things that I want to finish. And I think that will be sometime soon. But
between tomorrow and 3 years.
Between tomorrow and 3 years. Yeah. It's going to be between tomorrow and 3 years. Yes. Or 45.
One of the things that I really like is if you hate your job, I think you're lucky. Because once you reach financial freedom, you just flip a switch. I'm out of here, right? We loved our jobs. I loved mine. You might like yours. I don't know if you love it, but I mean, it's good for your life, right?
Yeah.
So it's still a job, and eventually time freedom wins out.
Yeah.
It's easier if you hated it.
It is. I mean, and too, that your company is going to go through some shifts and changes. I mean, that's what happens when executives leave. And so I know that about my people, the people that I've seen secretaries go to directors of departments or admin go from directors of departments because they were hard worker, they were smart. And we recognized that they could do the job and we groomed them and mentored them through that process. And so now they're on the other side of that. And so, yeah, I'm always very conscious of the people that have helped make what we've done great and how I've sold to them, but it's had a return on investment for me and them back to me. So yeah, it's just, I don't want to, no regrets, and I'm not going back. When I walk out, I am done. Like there is no Michael Jordan return tour. Ain't happening.
No, my goal is to never go back to. I did leave with the caveat of, hey, I've got this team in place. Everything is set, and we're that guy. And I said, if the team quits, I'll come back. I'm not going to let you guys tank, but the odds of that is 1 in 20,000.
Right.
Financial firefighter. Nice name.
Yeah, good name.
Has anyone ever said your brother looks like Cliff from Cheers? Not until just now, and the 30 times I sent him that screenshot. It's going to be great. No one has.
Awesome.
Yeah.
It's good.
That was an awesome statement. Thank you for that.
Good.
Mikkel Turumbar. Howdy. Howdy. Peyton. Howdy. Question. Is it okay to be house poor? I'm looking to buy my first house. Could be cutting it close unless I rent out the extra rooms. Is that a fine strategy? So are you single? Are you married? Is there more people making this decision than you? How much of a hurry are you in to get into your primary? If you can house hack twice, once or twice, and the benefits to house hacking is the lower down payment, the increased cash flow sooner. A lot of people focus on the reduce or eliminate your housing expenses, but here's what I like about it. It lets you start that savings rate, and you can live for free or pay a little bit or get paid to live where I'm at, to the point where the unit I'm in, if I moved out, would rent for, I think, $1,900. I think fixed up $2,200, but I'm not going to fix it up. So if I move out and rent something out, my mortgage would be $1,900 or less. So does it have to be first to buy that house? Can you delay it maybe 3 years and house hack once or twice between now and then? Being house poor, and if you use the term house poor, that means it's going to take up a significant amount of your income to pay for where you live. Are you willing to rent out the rooms? That is a successful strategy that people like Todd Baldwin are pulling off very well. What are your thoughts on that, Matt?
Yeah, I think so. I mean, I think that the more you can delay, the better it's going to be. And you got to get in the game, but it's how you're getting in the game. So yeah, I mean, there's a lot of people that have built house hacking, actual rooms in the house, that have made that a big business for themselves. Todd Baldwin, Spencer Cornelia. There's a bunch of pretty successful guys that have done it.
If you're looking at buying a house and then
Dion
renting out
McNeeley.
rooms to offset the expense, since you're going to be house poor, the biggest consideration that I would take away, and this is something I probably got from Todd Baldwin's channel, is its bedroom to bathroom count.
Yes.
It's easier to rent rooms if each room is almost 1-for-1 to bathroom, if not at least 3 bathrooms to 5 bedrooms or something like that, because it's not the bedrooms. It's easy in your head to go, I have 4 bedrooms, I can live in one and rent out 3. But if you have a 4-bedroom, 1 bath, that's a challenge.
Yeah, it is. And that's why that level of house hacking here is not really a big thing. So many of the older homes here, it's whatever bedroom count, 1 bath. So it's 3-to-1, 4-to-1, 5-to-1.
And this next question sparked an idea for a video, a standalone video.
Okay.
Matt Bittner, howdy. What's the minimum number of houses you need to replace your W-2 income?
347.
Done. Cool. Videos. So, Matt, that's a great question. And it points out 2 mistakes that I've not clearly communicated. The first is we think we need to replace our W-2 income. While you're working, while you're creating money from that W-2, you are saving for retirement. You are paying the highest form of taxes because it's earned income. You are having the expenses of working, whether it's the commute, the car maintenance, the trip, the time to travel, all that stuff's going to go away. So the thing we're trying to replace, and this is my suggestion, you can try to replace your W-2. It's actually what I was working at the first 3 years. I hadn't had this thought. It was always, I make this much, I need to make more than that. It was actually, I made this much when I was a cop. I wanted to make more than that. That was how my brain was working. We need to replace our cost of living by a multiplier of 3 to 5. So if it costs you $5,000 a month to live, I would want the person to make 15 to 20,000, 10 to 15, somewhere in there, like multipliers of what it takes to live, so that you're continuing to save, you're able to build your reserves, you can handle things like a pandemic, stock market crash, whatever comes up. So it's a multiplier of what it costs you to live, not your W-2, because W-2 can be different for everybody, but your cost of living is what matches you uniquely. And the second thing is, Number of houses is irrelevant.
Mhm.
I know of an investor who has over 25 rentals, but can't afford a laptop.
Yes.
I have 7 properties, and my cash flow is looking like, if I've done the math right, about $15,300 a month of 7 properties. So it's not houses, because there's a big difference between a house and small multifamily. 16 units out of 7 properties. It's the minimum cash flow. If you're using the BRRRR method, where you're recycling capital and you're adding debt to an existing asset, your cash flow per property is a lot less, so it's going to take more. If you're not recycling capital, but you're recycling cash flow, you might have less properties with greater cash flow. And then there's the time element. When you buy a property the first year, you might get a 10 or 20% cash on cash return. In 3 or 4 years, that's double or triple.
Right.
So over a period of 10 years, the rentals that I bought a year ago are performing well. The ones I bought 8 years ago are amazing deals. I can't believe how much money they make, kind of thing. So there's a couple things to look at there, which I think is worth its entire own video, which I will bring up your name and say thank you for the question that made a video. And then Tom and Miss Independent took comments back to make me lose sleep all night tonight. I will wonder forever what those comments were. And then my chat moved, which is good. It means, there we go. My chat moved. Those 2 missing things, so it should be easy to find. Wow, there's a lot of chats. This is good. I might have to put in a comment saying we're wrapping up when we get down to this point here pretty soon.
Yeah.
And then Aldair, Howdy, and Julie, they talk about screens liability and daycare is a bad idea, referencing when we were talking about a duplex earlier about the other side having a daycare. Tom, what is your biggest failure in your investing? How did you ever overcome it? What is your biggest failure in your investing? How did you overcome my biggest failure? What's that?
Sounds like another video.
It does. Biggest failure. I think we've done that one a couple of times. Or biggest mistake, but failure is a good strategy, a good tactic or word. Words are hard. My biggest failure was when I started, I didn't run it like a business from day one. I rented to a friend because who can trust a stranger? I didn't use a lease. I let the rent be late because they were a single parent, and that just like I was. So I knew the challenges. That was my biggest, and I overcame it because I got lucky. Luckily, the housing crash happened and I was underwater and couldn't give the house away. So since I was stuck with the property and couldn't give it away, I decided to educate myself. I got over it by educating myself, finding podcasts, audiobooks, content on YouTube, BiggerPockets, and educated myself to run it like a business. How about you, Matt? Biggest failure in investing?
Picking the wrong area. I started out in the wrong spot. My first house hack, that was fine. Thought that was going to be life. That was good. But when I started really investing, that was the mistake that I made. I saw what I thought were decent returns. I listened to the people that said only in cities 100,000 and larger. Huge mistake. Huge mistake. The biggest market I invest in now is 30,000. 30,000 people, 15,000 people, 30, 15, and 4, or 30, 15, and 3. Those are where I invest now. And I can tell you, it's a lot more powerful being the owner of 124 units and 43 buildings in an area that is populated by less than 50,000 people than it is to be that in an area that's populated by 120 or 130,000 people, or in some cases, 1 million people. It helps the brand and what we're trying to do. And if you just handle yourself right business-wise, deals then, I didn't do my first off-market deal until probably 15 or 16 years into my investment journey. So now they happen, they're probably 20% of the deals, 25% of the deals that I do are probably off-market deals. So yeah, my biggest failure by far was I picked the wrong market to start based on what little information I could get, which was you got to go to bigger places. not true.
Let's do a Three Amigos biggest failure this week.
Okay. Sure.
Cool. Chester, interesting question. Did you remember if what's that?
If you're available.
Mike, got to check my busy schedule. I know Mike has a 10 o'clock on Thursday where he has Thatch Newen on for a live stream, I believe, to answer questions and stuff. So look forward to that. One rental at a time here on YouTube. Thatch Newen will be on there with Mike at 10 o'clock Thursday. Chester Williams, interesting question. Did you remember how you felt when you made your first offer? In case so, what were some of the things you were thinking of? My first offer, when I was looking at investment properties, my first 5 offers would have bankrupted me. Because here's what I was thinking that was a mistake. I have a friend who is financially free, has 30 rentals. He's been a real estate agent for over 20 years at the time. So this is 30 years now. I thought he was my mentor. That was the mistake. He had never invested with mortgages. He had never invested in small multifamily. He worked as a real estate agent in his office, and every time the most amazing screaming deal walked in the door, he bought it all cash. He did not know how to run the numbers with debt. He didn't know how to structure debt. He didn't know how to do anything that I wanted to do. But I was so brand new to this. I was like, this guy's financially free. He's got 30 rentals. Like he probably knows what a lease looks like all these things he knows that I don't. And the first 5, at least 5 that he had me making offers on, I luckily didn't get. One, I started educating myself and figured out the first problem with my tenant was my fault for not running like a business. And I educated myself on numbers. I looked back at the offers I was making. I was like, wow, if that person accepted that, I'd be losing money every month after the house hack. So the confidence was there to make the offer because I thought I had a mentor. So remember, your agent and your lender are not your mentors. And somebody who invests in a different asset class with a different strategy with different goals is not your mentor. Find somebody or a group of somebodies like the Three Amigos or the REI Avengers who've all used different strategies to try to get there. Find the things that will work for you, how to run the numbers on your strategy. If you're investing at a distance with property management or self-managing house hacking locally, very different math that you're going to use until you learn that. That's what I was thinking. And how about you, Matt? Your first offer?
I was S-ing my P's. I was S-ing my P's. Yeah, it was not good. I was very scared. Yeah. And honestly, that probably was still a thing for me until, man, I make my spreadsheets bleed. I run, I rerun, I refactor, I refigure, and yeah, I was that way for a long time. Just double checking, triple checking, double stamping the triple stamps, everything. It was bad. But now it's swung the pendulum all the way the other side. It's kind of like, yeah, sure, send me a PNS. Click, 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 DocuSign done. Okay, let me know if we get it.
Yeah, the offers now with my agents, I send an email with the outline, like you don't even think about it. Because
exactly
3 or 4 years ago, the email, the auto search was kind of like the scratch off lottery ticket. Now I make the offers. The accepted offer is the new scratch off lottery ticket that I'm then going to go and see if that's the next place that's going to increase the cash flow.
100% agree.
I blocked the spammer. Hopefully that stopped him from going any farther. Melvin Yoder. Howdy. Jay Hayes. Howdy. Cheers. Sundown time. Awesome. Ninoshka Fernandez. That is a beautiful mix of names. When you move out of your property, do you get another one with conventional loan? The prior property taxes increase as investor. In some states, it can change. In mine, taxes don't even know if I live there or not. The county tax assessor doesn't know if it's a primary residence or not. So I guess in some areas, it might be a thing. I think in some, you get a owner-occupied discount maybe that goes away. Your insurance will go down because you're no longer insuring your personal items at the property when you move out. But I haven't seen taxes go up because my counties don't even know where I live. Nothing's recorded on county as being a primary residence. How about in your area, Matt?
Same. It's no idea. The only thing you get is
The homesteading
a
thing.
senior citizens discount or military discount.
If you're 100% VA disability, you can get no taxes.
Yeah. Yeah. There's nothing else really here. I'm not even sure if you do 100%. I think it's a fraction of, but yeah, there's yeah.
In Washington, it's 100.
That's good.
Like you're either 100 or not.
Interesting.
Chester, that honestly sounds like the start of a joke. What do you call a group of kids? It does. I don't know. Let me go out to the windowless panel van and ask them. DJ Gaines, howdy. Kenzie, howdy. I am also an avid scuba diver. Where is your favorite dive location so far? Koh Tao, Thailand. Warm waters, whale sharks. I mean, 35-foot whale sharks that you get to play with. Don't touch them, not supposed to. But when they thump into you, it's okay. The Puget Sound is cold and you don't have much visibility. Colombia was great, but sharks everywhere. Thailand was just hands down. Can't wait to go back. Best scuba. I'm actually going, shoot. I was supposed to go this last weekend. I love my memory. Have I mentioned my memory? And buy a new dry suit for the Puget Sound area here. Nice. Love diving. Tony, howdy. Welcome, Matt. Buddy, suggestion on where to store liquid capital while searching for properties. The money is in the bank, isn't working for me like the money is in real estate. I have an unpopular opinion. I want my money in a low interest, worthless savings account, scratching at the back of my mind, telling me to find the next deal. If I found a 3 or a 4% return on my money somewhere that was fairly consistent, I'd be like, I don't know if I need another rental because that's going to take work and blah, blah, blah. And that would be a killer for me. I like it to the point where up to $250,000 in a financial institution, unless they have the DID, is that what it's called?
Yep.
Where if it's a smaller institution and they insure beyond FDIC to where no matter what, there's an insurance policy on it. There might be some better places that you can keep it for a better return if that's your goal, buddy, but I think it would motivate at least me to not hunt so hard for the next deal.
Yeah.
James J. Howdy. Hello, gentlemen. I've been aiming for a 10% cash on cash return, 25% down payment on a 30-year fixed. However, the best I've been able to find thus far is 8.4%. Would you personally consider 8.4 return worthwhile? Given current market and lending conditions, or would you continue searching for 10% cash on cash? Thanks. It isn't that a 10% or a 15% or a 5% is the goal. It's study your local market, figure out which asset class is best. In some places it's single family, some it's small multifamily, some it's house with an ADU, could be large multifamily, whatever the asset class that's performing best in your market. Learn the average. If the average is 8.4, wait for the 10. If the average is 6.5, and you found an 8.4, that's the one I would go for. If it's the asset class that I would want to invest in that is performing the best in that market, what is average? Beat that. So if you're only finding 8.4s, is that the average? Hunt for better. If that's the best deals you can find, because I think that was your words, best I've been able to find thus far is 8.4, sounds like that's the deal I would have pursued.
Yeah, the only other thing I would add to that is write your offer that gives you a 10% return. Write your offer that gives you
watch days on market as days on market pile up, make offers that the numbers that do make sense to you.
Exactly.
Chester, it's crazy now the dollar is stronger than both the euro and the British pound.
I know.
Sterling. Nice.
Yeah.
Don't know that I've ever seen that in my life before.
I've never seen it. Nope.
Might be time for a European vacation. My daughter's going to Europe before the end of this month. She's going backpacking, typical 20s thing, you know.
There's no better time than now with the dollar exchange. The couple times I've been to the UK, it was $1.50, you know, so it was $1.50 to buy a one pound. And then the euro was like 123 or something like that. So, or 118. Now, if you're going to go now.
I have a friend who, she's from Colombia, married a friend of mine from the Marine Corps, lives here, is a citizen in the United States. Now they've been married a while, you know. went to Columbia for the summer because she's a school teacher, had the summers off, and bought an apartment
Nice.
because the dollar's so strong.
Yes. Yes. Yeah. It's crazy.
Adam, howdy. Matt, how much money do you spend a year on yard sales? Good question.
Great question. I think this year we'll probably spend, I would guess, probably $3,000 this year, but that includes a motorcycle, a truck. Yeah, a motorcycle and a truck is in that $3,000. Yeah. So yeah, we are aggressive.
I grew up going to flea markets or swap
know.
meets or whatever you want to call them. And so I learned whoever has the ability to walk away has the power. That's a good thing to learn there. The other thing I learned is our family has this sentence. I've never seen one of those before in my life, but I know that I couldn't live without it. Whatever it was.
Yeah. Yeah. It's been great doing it with the kids. They've learned a lot of discipline, just because we go somewhere, you don't get something, that we can always ask for a lower price. Samuel was crushing it this week and I was a little bit annoyed. He was 4 different yard sales. He was given something. And I was like, no, please. And like, oh no, we don't mind. I was like, no, please.
It's not teaching them the right
thing. I'm like, this is not a learning day.
No. Well, my glass is empty. So that's what I'm going to blame the overshare on. The other day I was in a parking lot.
Yeah.
Waiting for somebody. And I saw a vehicle driving around with a woman around 40 with 5 kids, all different races, all the same age. So not her kids. So she was obviously babysitting, daycare, something, driving around the parking lot with the windows down, hitting everybody up for money and was making hundreds of dollars while I watched, literally teaching those 5 kids.
Yeah.
This is how society works.
Yeah. That
anyway, really overshare. Bad. Sorry. Matt Bittner. Howdy again. I would expect the conflict to put a floor beneath the price of oil. Power plants are substituting natural gas for oil in Europe. Nice. The strategic petroleum reserve is still being drained. Yes, and when that stops, expect fuel prices to go up. Tony. Howdy, Tony. Waiting to close on a home with a fireplace. What do you recommend to a fireplace newbie? It has a chimney. That's all I got. It depends on where you're at. In Siberia, you probably need the source of heat. Here in Washington, I board them up. It's in the leases that they can't be used. A lot of the counties here have burn bans in place, even for sources of heat, unless there's a power outage. So I don't have to maintain chimneys, don't have to worry about tenants using them. One of them, I literally just covered off the top. It's not going to, they might have a fire for like 5 minutes, but they're not going to have it in there for a while. Chimneys are like hardwood floors to me. If you live there, sure. Once it's a rental, cover it with LVP, board it up, close that fireplace down, take it out, put in a one of those display inserts that go in there. That's what I would do for that.
Yep. Yeah, that's what I mean. Most fire policies do not allow fireplaces. And so that's typically one of the things you want to do. The other thing you want to do is I would get an insert and put it in there. Or instantly make it decorative, i.e. put, where you would put something like a log holder or something like that in there. I would then put candles. I would put plastic logs. I would put that sort of stuff in there to make sure that they know it's not usable. But as part of it, because chimneys can be structural to homes, one of the things you definitely want to look at is you want to have a chimney sweep it. Don't go with a big company. In most cases, a lot of times these guys that work for the big companies, they're really super talented. They can jump on your roof. They can do it much faster, and they're not going to be all goofy about trying to upsell you some package. But I would have it chimney swept. Usually that's between $800 and $1,100. Because what you want to know is you want to know if the limestone in between the bricks is degrading, because if it is, that can become a structural issue where the chimney can then collapse in on itself. So those are the things that I would do, is just have when you're buying the house, have a chimney inspection. If you don't have a chimney inspection, just have a chimney sweep go in and make sure to clean it all out, because that is often one of the most neglected things. If it's off the fireplace and there's nothing else put into the chimney, That's one thing. If you actually have heat or a gas hot water heater or anything like that going into the chimney, you're going to want to make sure that you line the chimney, because again, that heat and cold will actually crack and make the limestone, which was used for mortar, in between those bricks, more brittle.
Michael Smith, question. If you do a seller finance deal, how do you ensure they actually continue to pay the mortgage? Escrow attorney receives funds and pays everyone each month? No. So if you do a seller finance deal, so I mean, you're selling the property, it gets registered through title and becomes a financial note that you own. If they stop paying, you go through foreclosure, just like a bank would.
Mhm.
So you title down payment, closing costs, all that kind of stuff, any kind of fees for it.
Yeah.
But not the mortgage once it's in place. Once it's in place, a seller finance deal creates a financial note. There's actually a secondary note market that you can buy or sell those things on, just like the banks do. And most banks that create a mortgage on your property don't own it a few days later. I think I've had one time they owned it for like 3 months and then finally sold it, and it caused all kinds of problems. But yeah, that was a good question. No, it's why you go through a title company or a real estate attorney to make sure everything is done right. This is not just a contract, like a lease between you and the owner, or the new owner, or you and the tenant. And you're creating a financial note that gets registered with the county as a first position against the property. Keith, howdy. For some reason, we have never been able to depreciate your stocks. Oh, they depreciate. Not against your taxes.
Yeah.
Surf Marco took back a message.
A lot of
And then
that.
James J, this was sending support for his super chat. I appreciate that. Surf Marco asked the question we read, do lumberjacks ever retire? Simply Z, howdy. It's worth learning my market if I'm is it worth learning my market if I'm unsure I will continue to be living here? Out of college and in a high cost of living area, it seems like the time spent won't be relevant to the new market. Thanks. So the learning while you're there would be irreplaceable.
Mhm.
The rent that you lose while you're not investing there would suck. If you're in a high cost of living area, you have a good chance for appreciation. And house hacking is more important in a high cost of living area than it is in a low cost of living area.
Mhm.
And one of the strategies that's most effective with the military is to literally, you and Zuber talked about this in a video earlier today, buy a property everywhere you live. You can hire a property manager when you leave, or in 2 years, you could sell it, pay 0 taxes on the capital gains because it's been your primary for 2 years. Every scenario that I just talked about sounds to me better than renting for a long time and delaying buying, as interest rates can go up and prices can go up. That would be my suggestion. Chester, I know the three amigos of Phi went through this exercise once before about starting out and where you'd be at now, but I'm curious, did either of you notice roughly when the income snowball kicked in? For me, it was like it started to kick in at year 6. But at year 7, when I paid off the single family house, had 4 mortgages, paid 1 off, had 4 properties. The cash flow was then more than what I was making when I was a cop without having to work for it. Income snowball happened right around the 6 to 7 year mark. I started with a bunch of bad debt and a low income. So if you're not starting with like almost $89,000 in bad debt in my name I didn't know existed until the divorce, and I had a $17 an hour job. Like if you take those 2 out, hopefully you're making more money now and you don't start with all that debt. Income snowball might happen sooner. How about you, Matt?
Yeah, it was later because I started investing in 01. And so we were getting over the .com bubble and then starting to run up. I acquired 3, 4, 5 properties until about 07, and then the world fell apart and I tried to buy through that, but the buys through that were slim. I think I bought in 09. I think I bought in 11 and then 12, but it was only onesies. So it was, and it was a very capital intensive because I was buying foreclosures. So yeah, it was a long time. But when it came, it was an avalanche. It wasn't just a snowball. It was an avalanche.
Well, that's the thing I like to talk about. A lot of people saying I'm going to wait for the crash to buy. So let's say there was a crash because there was a whole bunch of foreclosures. Do you have the high capital to buy foreclosures? Right. because
I get news for you.
disappear.
Wall Street's jumping in there, buying them in stacks. Even investors. There was, I live in New Hampshire, and somebody just bought a 54 unit portfolio, and it, boom, gone. And they're actually evicting all of the tenants and rehabbing all of them at the same time, which I completely don't understand the strategy.
I think they were Section 8, right?
Yeah, all the
Yeah.
Section 8's gone.
So that's a fund doing a 10-year plan.
Exactly, right? And that's the thing is you can notice it when it happens. You're like, you know exactly what they're doing here. 10 years from now, it's gonna be worth X amount of dollars. It's gonna be cash flowing this much more, and they're gonna get rid of the portfolio.
Tom, Simply Z, learning your market is basically teaching you a new skill. Absolutely agree.
100%.
Practice where you're at and then where you want to go. Compare yield of both, and if you want to invest from a distance. If you want to invest for a distance. Chester, lumberjack landlord, 45,614.
Exactly, 45,614.
And making sure that I did my work and sent you the Pink Panther today, which I did in a group text to include Millennial Mike.
And it's really funny because Zoob has asked me, I think he's starting to wonder. Zoob's asked me 3 times in the last week. So how long do you think it's going to be? Zoob, don't worry, I'm going to break your record. It's cool. Like,
so I know you get this. I'm hoping other people get this.
Yeah.
None of us really care when you retire.
Totally don't care.
We're being encouraging and supportive and
Yeah.
sarcastic as a normal form of communication.
Exactly.
And I actually understand it's hard to quit a job that you don't hate.
Yeah. Dion knows after he sends me the Pink Panther, I'm not calling a hotline.
Miss Independent replies to Julie. I'm kind of along those lines, especially if I'm not living next door, with the daycare not being a good idea.
Yeah.
Nicholas
Looked at daycares, lots of liability, not much profit. They are nope, no thank you. It is purely a public service if you're going to do that.
Well, she's not going to run it. It was a tenant that's running.
Yeah. Yeah.
It's
No, hard pass.
I wouldn't have a problem with it. I think most times if you have somebody that's running daycare out of their house, if it's zoned and allowed to happen, it's generally a single parent who's scheduled with their kids makes
that part's fine.
Yeah,
that part's fine. Yep.
For that, it would make sense. But
as soon as you add an employee to that thing, no.
Oh yeah, no.
Nope.
Nicholas Massey, who sent the $20 super chat, which is greatly appreciated. This was a comment I read already earlier. Hey, fellas, I found qualified tenants for my new property with the 2 houses on it. Dion, extra thank you for the not female. I didn't send you a female for the feedback over email. Oh, my brain put those words together.
Like you're trafficking. Well, come on.
Words are hard. Dividend, and I don't traffic in adults. That'd be weird. Dividend Dave, paying for this live, deducting this super chat. It is definitely a deduction if you do a super chat.
Yeah, 100%.
You are educating yourself on real estate. Well, I'm not saying definitely. Send it to your CPA and see what they think.
I gotta believe it is, though.
Yeah, and remember, the question is never, is this a write-off? It's how do I make
how
this
do I make
write-off?
it? Yes, exactly.
CPA will know how to make this a write-off.
That's right.
Tom, I'm going to retire before Matt, and I just got started last year. Probably.
Probably.
And then Nicholas Massey's picture has a jersey with a 25 on it. Looks like the sports ball with the big basketball. Not sure which jersey that is. Simply Z. Howdy, Tom. Thank you. That makes sense. I am overthinking it. Appreciate the response. Tom, yeah, Mike Stuber would cut you off at the knees if you don't do the work.
Yeah, gotta do the work.
Army Phaser. Howdy. I'm only an hour late, which means we probably just sounded like chipmunks if you went back to the beginning, set it up to double speed, and then caught up. Dividend Dave. Yes, Wednesday, I believe it is. So that's the Tacoma FI meetup. There's a Facebook group, Tacoma FI, and we meet once a month. Has been on Tuesdays, but I think we got it moved to Wednesdays, which I'm hoping it stays there. Shirt Lizard. Howdy. Screen printing and embroidery. I wonder what they do.
Mm-hmm.
Matt and Dion. Matt, don't retire until you have an income source to replace your W-2. You'll be bored.
It's much bigger than my W-2.
But I think what they're saying is don't retire until you have a way to make income.
Yeah.
Where it takes your time.
Yeah. So I think for me, I, much like Dion, we are not paying any bills with our YouTube money. And so I just like helping people. And so it gives me more time. It just gives me more time to help people. So I will do the course. As part of my course, there will be mentorship, but group mentorship. So we can all iron sharpening iron. So it'll be pretty cool. It'll be limited with how many people we'll have in a given class. But yeah, we're formulating a lot of that stuff just because we really wanted to make a true impact and be a very high percentage of people that execute.
Nice. I don't have that problem. I don't need time to replace my W-2.
Mm-mm.
There is never enough time to do all of the nothing that you want. I think this last week I spent like 10 hours on virtual Skyrim. I could have done 50. I might eventually do 50.
Mhm.
Then I put in my email in the chat, which is just my name, dion.mcneeley@yahoo.com. Martin Mendez. Bear with me, Matt.
Yeah, you're good.
Howdy. Welcome back to Dion Talk. This is going to be a nice short video where I answer a question that came up in one of my live streams from Martin Mendez. Thanks, Martin, for the question. Are ADUs in general a good idea? There are several things about ADUs that make them good, and one time where I might not consider them a good thing. The first thing is a house with an ADU, when you're buying it, the numbers work like a duplex. You have 2 units on one property, but the lending is better because it's single family house, which means FHA conventional can be 3% down conventional for a first time home buyer, or 5% if you already owned a property in the last 3 years. You can have an income source, you can house hack, but you're not paying the sometimes higher down payment that a duplex, triplex, or fourplex would require on conventional, not FHA. The ADU, when it might not be a good idea, is work with your municipality. What is their permitting like? What is their timeline like? Michael Zuber from One Rental at a Time has been working on an ADU for coming up on 2 years and hasn't broke ground yet. So if it's something you're needing to do to generate income because you have a small portfolio, it's probably not something I would jump into right off the bat, unless you're in an area where you have a contractor who works well with the city and the city is encouraging ADUs, and you might get a more streamlined permit process. I'm trying to think. I have Matt, the lumberjack landlord here. Pros and cons to ADUs.
It really depends on the costs. Like ideally, it's something that's going to drive much higher profitability because you already own the land. You already have so many of the things that you need to make that unit successful. So me personally, I've got a number of properties that I've highlighted as ADU properties. What most people don't understand and don't recognize is that there is a massive cost in most areas to getting this plan going. I am into my ADU. I am $6,000 worth of architectural drawings. I am going to be about $5,000 in attorney's fees. Be about $5,000 in survey fees. It's probably going to be about $15,000 for the impact fee. And then it's going to be $9,000 for the sewer hookup fee. So congratulations to me. I'm building an ADU. I've not had to spend any money for the land, and I'm getting feed to death, with 50-something thousand bucks in fees before I've gotten one approval, before I've moved one shovel of dirt, and thankfully, before I've ever even considered or had to consider solar panels like somebody. And that's where I feel bad for Zoo. Like he spent so much time, so much money, like he's almost 10 grand in, and he just found out about the solar panels. That's brutal. That's brutal.
So here are 2 things about ADUs to consider before I wrap this up. First, there's a YouTube channel, That ADU Guy.
Yes.
You should check it out. He's got great concepts. One of them being sometimes bigger isn't better.
Mm-hmm.
The cost of building a 3-bedroom ADU compared to the rents you'll get, compared to the cost of building a 1-bedroom ADU and the rents you'll get, the ROI in some cases is better on the 1-bedroom than the 3-bedroom, which is counterintuitive. But if you are someone like That ADU Guy who works in this and has done it for the amount of time that he has and has his knowledge and experience, and you know your market, it might be the way to go. The second thing about ADUs is Matt and I have touched on building some of the challenges there. If you're Municipality plays along great. If it doesn't, it's a challenge. Here's the benefit to buying houses with an ADU. It's an almost missed asset class. Investors go to their agents and they say, I want to buy small multifamily, which doesn't pull up ADUs on the search. Home buyers go, I want to buy single family. So when they see an ADU, they go, I don't want tenants. I'm trying to buy a primary house. So you eliminate a lot of competition in the investor realm by looking for, and you have to know the colloquialisms to your area because we can't control the verbiage that the lister is going to use. So in your searches, you want to put ADU, DADU, granny flat, mother-in-law house, accessory dwelling unit, auxiliary dwelling unit, detached accessory dwelling unit, detached accessory, auxiliary, name everything in your search because investors might not see it, might not be looking for it, and home buyers don't want it.
True story.
Thanks for helping me with that, Matt. I appreciate it. If people have questions and want to reach out to you, how can they find you?
Lumberjack Landlord on YouTube and on Instagram, as well as my live stream 11:30 a.m. Eastern time on Sundays.
And don't anybody go anywhere because I'm going to wrap this up because I'm obviously making a video that I can pull out of this later. Thanks a lot, Matt. I really appreciate it. Until my next video, thanks for coming to my Dion Talk. Okay. Thank you, Martin. That was a great question. I'll fix that video.
It's perfection. I love it.
And everything but the but not today in it. So there will be something post credits there.
Yeah, for sure.
Dividend Dave. Calvin and Hobbes are my jam. Oh yeah, I'm definitely Spaceman Spiff. Buddies, Lumberjack question.
Yeah.
Please share how to scale to larger properties. We have a handful of residential sizes, but want to break into small commercial size.
Yeah, so I mean, I kind of got to that same point too, started to get enamored with, well, I can grow faster if I get into bigger stuff. The thing that I don't like about the bigger stuff is the debt structure. But once you get set up with a bank, with a good commercial department, they'll only pull your credit once a year. They will, but then you start needing to learn different terminology, cap rates, commercial, residential, mixed use, sprinkler systems. There's a big difference. And so I would absolutely start to watch stuff on people that are buying larger units. Even most of my units that are commercial, the largest I own is only 12 units. I would go bigger, but there's not a lot of that stuff available, and certainly not in the same building where I am. A lot of stuff where I am might be 8 units, but then they have 7 of those buildings in like a development. And so the path is looking at the local banks and talking to their commercial folks and just letting them know this is what my plan is. Having those conversations with them, watching a lot of videos on that stuff, because what you'll find is the debt is very different. There's a lot of people that love commercial because they're like, yeah, I get a tenant in there and he's there for 10 years and it's a store or whatever. The problem is when the store starts going south and 90% of businesses fail, I don't want to be their landlord when 90% of those businesses fail. I've got 1 property or 2 properties that really have a bunch of commercial in them, and I hate it. I hate the commercial aspect. I don't like it at all, but it's a building that's mixed use, and I love the mixed use units that are in that building. So my first tip would be watch a lot of the content on larger stuff, but I would start talking to banks and telling them what you're trying to do, because you're going to want to be able to pull on that relationship and say, hey, I found something. I'd like to talk with you about it. But if you just call that person out of the blue, there's no relationship there. They're just like, I don't have time for that call. They want to be dealing with, they don't even want to deal with me. My biggest purchase was a 12 unit at 1.35 million. That's nothing. That's a nothing deal to these commercial guys. They're talking about deals that are 10 million, 20 million, 50 million. My $1.35 million deal is literally like the commission on some of the deals that they're talking to.
It's like the Michael J. Fox movie, The Secret to My Success.
Yes.
We normally don't do loans this small, but you were a nice guy, so we'll go ahead. My thing, buddies, is the debt structure. So if you're talking residential, but not commercial, like you want 5, 10, 15 units or whatever, There are some DSCR lenders that will
Yeah.
do fixed rate debt on, I think Convoy Home Loans will do it on up to 8 units. There are
Yes.
some DSCR loans that will do it on up to 29 units. So you have to find a lender shop. I would avoid loan reevaluation periods, balloon
Yes.
payments,
Yes.
adjustable rates, all the same things that draw me into residential. If I was going to go in larger commercial, I would want to find some way to get that residential structured type of lending.
Yeah, and that's really nearly impossible.
Tom, I think super chat should give more comment space than regular chat. I totally agree. I think it should also make a sound.
Yes.
I've seen some content.
There are
creators-
some, it does. It's just a setting. It can
We
go
did-
like,
okay, so I got to find that because
yeah.
there was one, like, I don't think I saw it until time. And then
Yes.
it's definitely the way, like when I put in a comment that says, hey, I'm going to wrap up when I get down to here. If you want to thing mentioned, come in before that, get you to the top. Sound would help.
Yes.
REI Stoners, howdy. I still have not tried your gift.
What was that gift? 50 mil?
50 mil. Yeah. So I've been a truck driver forever.
He just said cupcakes that were 75.
Not me.
No. He REI
I bet.
Stoners. They just
So-
said 75. I saw him on, he's like, yeah, like no charge, just come over and hang out. I was like, that dude's cool. But I would be like feeling my antlers on my head if I ate one of
Well,
those.
I've actually never tried anything.
Me either.
So I mean, alcohol, sure.
Yeah.
And I'm not a smoker, so never smoked anything.
Mhm.
Edibles. And I've had a CDL my adult career life. It's time, so I appreciate the gift. But let me get to his question. What's up, Wild Stallions? Picked up one rental at a time hat. Nice lumberjack shirt next, but Dion needs some apparel, maybe something lazy like some flip-flops or TPS stickers. To put there. Actually, a person sent me a "but not today" shirt with my face on it.
Oh,
That was it. That was
interesting.
a great, yeah. And a girl snagged that. So nice. Something lazy like flip-flops. And Alizette, again, thank you for the
I love
super
that.
chat. Looking forward to this every week. Michael Smith, hit that like button. Every time you hit the like button, someone retires before Matt. Eric,
True.
howdy, Matt. Howdy, Michael Smith. Howdy, Eric. Howdy, Dion. Hey, Matt, question for Matt. I'm building a large portfolio like you, 150 units. With 120 units, what percentage do you pay your property manager? I know the answer to that one. Do you tear down with more units? Matt actually pays 100% of all proceeds to his property manager. And she's worth it.
Yes, it's my wife. Yep. So it's a great question. We're actually looking at potentially opening up a property management company because the ones around us are garbage. And we actually are the only ones in the area that actually manage a large portfolio ourselves of properties that we own. So yeah, we're looking at that. But yeah, step downs, all the whole 9 yards. I mean, the numbers that I hear are, if you're in that, 3-figure unit count, you're usually in the 6s. What I would encourage you to do is find a maintenance guy and find a broker, an agent. What I've done is I've kind of hacked it a little bit. And so I pay an agent to basically do all of my listings and post all that stuff now, since my daughter since she went into quarantine and we were in that for a year, we didn't have an option. So I pay her by the hour to do that work. And she does a great job. And then the same thing with a maintenance guy. I just pay him by the hour and 1099 him at the end of the year. And so we have those two pieces. So I get the property management, but with a much, much, much lower cost subset. Yes.
And someday I will have property management, but not today. Dividend Dave piped in with his super chat here, asking with his 17-month-old, wondering why you're not retired. Chester. Correcting his statement to David, my brother's name. I have absolutely no idea where Dan came from. And then Tom points out that Dan did a video too a couple of days ago.
He did.
He is my brother David's best friend and worked at my truck driving school for about a decade and just retired after 4 years of investing. Nicholas Massey. This is probably what came in when you did your super chat. I wish there was more space in a super chat to do this. So hopefully you're still here, Nicholas, and I'm hoping that I get to your question. I'd love a Section 8 soup to nuts series from one or each of the amigos. So far, it seems very confusing for the new investor. That is a great idea. I have one video on my channel called Section 8, How to Make More Money. And it's just basically how to save time and make more money, but it's not real comprehensive. So I think that's a video that we should do, Matt.
Yeah, cool. I'm up for it.
On my experience and Mike's experience and your frustrations.
And here's how smart I am. I'm giving them more units.
Exactly. Tom, I went and talked to them. Which references something we were talking a bit ago. Dividend Dave, my baby understands and approves.
Appreciate that.
Haynes JW, howdy. First time I've made it to a live chat. Yay. I'm in the now to 3 years time too, but not today. Awesome.
Yeah, nice.
You will get there.
Yes.
Majid, howdy. Joshua Joseph, howdy. Hey guys, do you think it is good to take a higher rate now and pay less in points now in the hopes that rates will go down in a year or two and I could do a refinance? So Matt might have a different opinion. I personally don't gamble.
Yeah.
I go on what am I going to do? I plan on keeping this property long term, buy down the points. I plan on refinancing to pull cash out or sell this property, I don't buy points. None of us knows if rates are ever going to come down in the next 2 decades. They could be in the teens for the rest of our lives.
Could be.
They could be zero next year. Fed rate could be zero next year. So it's not something I would gamble on.
Agree 100%.
Okay. Yeah. So what's your timeline? How long do you plan on having it? RAI Stoners, is it possible to add a bathroom to a house? Yes. Yeah. It's not cheap, and it depends on the layout, but you can add bathrooms. Sometimes it depends on your subfloor, and what kind of flooring do you have? Crawl space? Are you on cement pad? How high up would you have to elevate the room that's going to be the bathroom if that was the case? I've added washer dryer hookups in one. That was about $4,000, fully plumbed, fully electric in, all permitted and everything. Bathroom would be a little bit more than that, I would expect, with the drain system being bigger, especially if you're going to do like a full bath, shower and tub and everything.
Yeah, the big key is half baths run me about $5,000, which is toilet and sink. And so the key to them, the best place to hide one or the best place to put one is usually underneath the stairs going up to the second floor. It's a great place.
I have a fourplex that is 1.5 bath.
Yes.
And the half baths are all downstairs, next to the stairs. Okay. So under my stairs is enough room to put in a shower. Oh, nice. So I might turn those into 3/4 baths and add a bedroom, because right now they're 1,200 square feet, 2 bedrooms.
Wow.
So future unlazy Dion might increase cash flow and do that, but I haven't even had tenant turnover there. Yeah. So future problems. Yeah. Alizette, this is the problem with super chats. I should have done this question right when you did your super chat. So I need to figure out how to start searching right when you do them. I appreciate the super chat, but here's your question, because it wasn't probably enough room to fit in the super chat. If my goal is house hack a duplex, what are my options if all the units are already rented? I've had this situation with my fourplex. I met the tenants. 2 of them were on long leases, and 2 of them were on month to month. So 2 were instantly eliminated because you were bound by existing leases. If the units are already occupied, what are the lengths of the existing leases? You're bound by those. Some areas have a caveat, no matter how much is remaining on the lease. If somebody's purchasing it owner occupied and you give 90-day notice, they can move, so you can move in. Your lender would have to be okay with that. For me, if it's month to month, I get to know the tenants and I figure out which one is the one I least want to keep. And that sometimes isn't the amount of rent they're paying. Nope. It's the attitude, responsiveness, personality traits, those kind of things. Maybe the first month or 2, I don't get rid of a tenant. You have the intent to move in, right? That might be 3 months from now. So for those first 2 months, you're kind of vetting the tenants. Which one pays on time? Which one doesn't get noise complaints? Which one doesn't call you for super trivial things? The one you want to keep, you keep. The other one, you give notice to. That's how I would handle it.
I agree. That's exactly how you do it. That's the right way to do it.
And I hope you're still around, Alizette. I'm sorry I didn't get that when your super chat came in. I'm kind of new to them. I will figure out how to find the questions when they come in. Joshua Joseph, I need to extend my closing date. Any tips on making it a better deal for the seller so they don't walk away from the deal? It was due to a lender issue, and so I had to change lenders. Appreciate y'all. First, I wouldn't assume the seller's going to freak out by that.
Right.
I've extended 2 or 3 deals, and you just have your agent submit the extension request. Then based on the feedback of the seller, if they then made a demand or a request, I would do it based on what mattered to the seller.
Yeah, I'd say probably 35% of deals get extensions. And especially in these markets when it was very unpredictable how long it would take to get an appraisal back.
And just so everybody's aware, I kind of put in a message above us here a little bit that we were wrapping up at this point. So I'm going to get to the questions that are out, that are still here. Michael Smith has a question, and I understand the nature of this question. So the answer might sound a little sarcastic, but I'm not being sarcastic. Michael Smith asks, how do you guys reduce or eliminate self-employment taxes? Self-employment taxes exist for somebody who's running a business where they're the business. A dentist who runs his own shop. My brother who was a tree surgeon, an arborist who ran his own business. They have self-employment taxes. In real estate, this is passive income, and you have deductions like depreciation and write-offs to where, Matt, you are probably paying taxes now. You have the income to where you're generating enough. I don't know if you're depreciating enough to not have taxes. You did the cost seg to where you didn't, but if you did, you might have had it. 10 years, I've never paid a penny in rental income tax. 12 years now, I've never paid a penny. The write-offs and depreciation eliminate any tax obligations for the first decade or 2 as an investor.
Yes, I have an amazing accountant, Bob Langworthy. Main bean counters, he's the best in the business. I looked for a long time to replace my old, horrible CPA and found Bob, and he's been spectacular. Around anytime I need him. So I just feed him all the information, and then he tells me what needs to happen next.
Hire the right tax person. Yeah, that's not a decision. Like the multiple types of depreciation that there are, I couldn't define them without a Google search, and don't want to have that information retained.
Exactly. Right. Too much.
That's what we pay them for.
Yes. Yeah.
And then Ninja Vanish points out that we had the creepy spammer, which I blocked and I think stopped. And the other day I saw a Facebook comment from Ultimate Bargains, who watches Zuber's channel, comments and everything, but he says, I don't like to go to live streams where you can only comment if you're a subscriber. Do you remember how much spam I was getting when I didn't have the subscriber setting set?
I remember.
Like I hired you basically, and doubled your wage. What's 0 times 0? Carry the 0. So that you would block the spammers for me. Yes. Even with, you have to be a subscriber and it has to be for so many minutes. We still got a spammer anyway.
It's amazing. Yeah, it's amazing.
So, Kenzie, Dion, why haven't you bought a single family house for yourself yet? Do you plan to do so, or do you choose to house hack forever? So I own technically 2 single family houses. One is what I call a triplex. It's a house with a duplex on one property. The other one is the single family house that I had before I was a renter, before I was an investor. I live in a 1,200 square foot 2-bedroom with my own garage, my own shed, my own driveway. I have everything that I would have in a single family house. I have my own yard area. I rent a room to roommates because I'm gone a lot. I travel a lot, and it's nicer to have a person here. I mean, you talked about this on a video with Zuber where I can travel and I don't have to hire somebody to come and do anything at the property. I could eventually buy a single family. I would want to make sure that the mortgage payment was somewhere around what renting this whole unit out would be. So I'm still technically kind of living off the proceeds of the rentals. Financial freedom and time freedom are much more important to me than having a white picket fence separate from neighbors. And I have no sense of pride and ownership of a house. I think people that are worried about the size of their house, you have people coming over to visit. That's weird. Don't do that. Maybe someday, but not today, of course. I'm probably going to house hack another couple of times. Here's how it's probably going to go. I'm going to rent out the unit in the fourplex, and I'm going to rent where I like.
Yeah.
where I have the best view, where I'm closest to the most things, where I wouldn't want to at the expense of ownership, and then because there's maybe no cash flow or no appreciation or whatever the deal was, but it's where I want to live and have the cash flow from rentals pay for that rental. Because here's the analogy that I like the most. So I live in a fourplex. Whenever there's a problem here, I'm going to fix it. I have roommates. If there's problems, I'm going to fix it. Never drive in a mechanic's car. A good mechanic will fix everyone else's car, and theirs is falling apart.
Yes.
As a person, I will fix the problem for a tenant. Like I've got those 3 words. If there's fire, flood, or blood, it's worth a phone call and it gets handled immediately. At my house, I've had situations with blood and don't fix it. It's your house. Why take care of that? So I don't know that I ever plan on buying a single family house. I'm not crazy enough to get married again. That might be a contributing factor. If you have a spouse, then you have 2 people making that decision. So that was a good question. Are you planning to buy your own single family soon, or are you a house hack for the foreseeable future? Yeah, I don't know that I would ever want to own a single family house if that was mine. I want to be able to travel, spend 3 months in another country and not think, is there a leak that I'm not knowing about for 3 months?
Yeah, for us, we've got 3 kids, and we will, when they're all gone, we'll sell this house in 5 seconds. It's not going to be a thing for us.
Cashflow Johnny Ramirez, howdy lumberjack.
So,
Esther, howdy. Do property management fee maintenance cost 5% vacancy rate included in cash on cash calculation? How much is reasonable maintenance cost? So this is when you're running the numbers to see if a property is worth pursuing. And there are people like Matt, the lumberjack landlord, who go, I have large enough reserve to where I'm not setting aside for repairs, maintenance, and vacancy. And so don't compare year 22 to year 1.
correct.
Some people base it on the age of the building.
Yeah.
And, if you buy a 1930, it might cost more to maintain. To me, it would be when we're upgrades done. Sometimes the 1930 structure is much more sound than the 1995 structure. Property management fees can go down as your portfolio grows because you have more negotiating power with the property management company. I do 5% vacancy, even though I've never had a vacancy, just because there is some expense to a tenant turnover. It's not that you're planning on the long extended vacancy that you're covering. It's flooring, paint, the simple things, even if the tenant doesn't break anything, that are going to cost for a tenant turnover. For me, 15%, I've never come close to spending that much. So I calculate that, even though I don't set that aside once the reserve account is full. The extra income doesn't go to me to increase lifestyle. It goes to the investing fund. So that grows faster. There's a lot of variables going on there. And part of it is your risk tolerance. If you want a deal that you want to get a 10% cash on cash return on, and that first year it's only 5%, you might question all of your strategies. But if you pad things, you estimate lower rents, you estimate higher costs, and your return is better, it might be harder to find those returns, but I think mentally you're much more committed to it then. Keith, being retired for 8 days, my 9 to 5 has not changed. Nice. My first 2 weeks, because I retired on the 5th of July. The next 2 weeks were kind of the same. I was literally still going in, handing everything off, transferring everything, answering a bunch of questions. August was the first month where I had to make a schedule. Like there has to be a calendar because there's so much stuff going on, to the point where you wonder how you had time to work. Simply Z, howdy, thank you. Kevin Kauto, howdy. I have a great HELOC on my primary. It's variable rate, but there's an option to lock in rate for 20 years. The fixed rate is 6% right now. Your thoughts on using this for a rental down payment? Thanks as always for doing this, guys. So it would take a little bit more knowledge on the size of your portfolio and what your goals are and how many deals have you done. I suggest never putting your residence or your retirement accounts at risk on the first 1 or 2 deals, when we make most of our mistakes and tend to lose the most money. Or our exit strategy is even painful on some of those deals. But if you have 3 or 4 deals down, you have a good expectation that the return on the investment property is going to be enough to justify the debt on the property you're buying and the debt that you're adding to the property with the home equity line of credit on it. Make sure you factor that into your cost to acquire and your calculations for yield. Your debt to income is going to be impacted not by how much you take out of the home equity line of credit, but by how much you could take out. The calculation the lender told me was it's about 1%. So if you can borrow $100,000, they factor $1,000 a month into your debt to income as debt monthly, even if you've taken nothing out. It can impact your credit score. Partially, when you have the home equity line of credit and you haven't taken anything out, that loan is at a 0 credit utilization. And as soon as you take out 80 or 90% of that home equity line of credit to buy a house, you now have much more than 10% credit utilization on that one credit line. That does impact your credit score. So there's a lot of things to factor there. And most of it, I think, is based on your experience level. Don't borrow against your retirement account. Don't empty your retirement account. Don't put your primary house at risk on the first or maybe second deal. But by the third, if you're having success and you've gained a reasonable confidence in your ability to get a return, the expected return, run the numbers and see if it makes sense. That's a good question. Dividend Dave. It's for sure an educational expense. Dividend works in tax law stuff.
Yes.
Tax stuff. There's an other expenses section on the Schedule E list of expenses. Flash of light. Howdy. How do you turn down family or friends as potential tenants that would normally don't qualify? Even as a roommate hack, I don't want them. Do you tell them you don't mix family and business? So here's how it worked for me. In the beginning, when I didn't run it like a business, didn't have a lease, renting to any friends or family, even if they qualified, would have been a mistake because we haven't grown the backbone to stick to a lease. Once you have your systems in place and you have a lease and you have not excuses, but concepts like I could be audited at any point in time and I don't want to be sued for discrimination. So if I rent to you and you have a 500 credit score and I won't rent to them and they have a 700 credit score and they are older, younger, different religion, different gender preference, different race, you lose everything. So you run it like a business. To me, in the beginning, I wouldn't rent to friends or family because if you don't have your systems in place, they are going to walk all over you because it's human nature, even if they're a great, decent human being. Once you have your systems in place, I have a niece, I've had one of my daughters, I have a couple friends that rent from me. Here's the lease. Here's what we stick to. Here's the late fees. Here's the eviction notice if things don't go right. And I'm going to at some point be audited by Section 8. I'm going to at some point be in a lawsuit where they're going to look at all my records. You want to rent, you're paying what everyone else does. You have the deposit, you have the rent, you have the same criteria to meet that everyone else does. So if you have friends or family that don't meet your criteria and you rent to them, you are setting yourself up for a lawsuit. That would be how I would look at it. You could still bend the rules and rent to friends or family. I know tons of people who do it. But that's my reasoning for not renting to somebody who wouldn't qualify.
I laugh at them and then say, you wouldn't rent to you. So I certainly won't.
Keith, smash the like button, guys. Thank you. I would appreciate that. Kip Stevens, howdy. Thank you for hanging out. Appreciate you coming in, Kip. A little late. Sorry, been running service calls in 112 degrees.
Oh,
nice.
Brutal.
Yep.
Not Siberia.
I know it's broken 100 here in Washington. I don't know if I've seen 112. I do know that we made it to June with 5 days above 70 degrees here.
Wow.
So, yeah, I like the weather here. I don't want to live in Siberia and I don't want to live in the desert. Go visit those at certain times a year. Chester, I like that answer. Good questions in real-time format. Thank you. Kip Steven jumps in with a super chat, which is appreciated. Lumberjack looks normal with his ball cap on. I figured it was just a bad hair day.
It's actually, I had a ball cap on all day long because I started up. It was, I did not get much sleep last night. So yeah, so it was a rough, long day today.
If you ever see me do a video wearing a hat, it's because I was playing a VR game right up to time to start.
And you have the mark on your head.
The indents. Yeah, so oh, baseball hat or color hat. I don't have the bad hair days. I have the bad head days.
I understand.
Esther, what's a good website to have ADU, DADU, mother-in-law search? So Esther, all of my deals are from the MLS. I've never searched on Redfin or Zillow or any of those other property places. I have looked to do rent comparisons, and I have just looked. The places that I've purchased showed up on Redfin and Zillow 2 or 3 months after I closed as pending.
Yeah.
So to me, not the best source. I have, and I wouldn't do it if I was an agent, and I wouldn't do it if I had one agent. I would have at least 3 agents, because searching on the MLS is nuanced. Give them exactly the same search. I have at least 3 agents with the same search, like copy and paste email. This is what I'm looking for. In over 10 years, all of the agents I've ever worked with, one time within a 24-hour period, sent me the same deal. Somehow, however they put the search criteria in and set up the auto emails, it's different.
Yeah.
So it's the best website to use, in my opinion, is your multiple listing service in your area, where you have paid professionals who paid for access to the MLS, and more than one, but be transparent.
Yes.
Don't let an agent think you're the only one working with them. If you're a home buyer looking for your primary, and you're going to go and look at 20 or 30 homes and take up a bunch of their time, you should sign an exclusivity agreement and only work with that agent. Protect their time. It's totally worth it as a professional for them. Okay. If you're an investor and you just go, look, I want you to set up an auto search. Here's my criteria. You're probably never going to hear from me again until I'm ready to make an offer. But I work with several agents, and whoever sends me the deal first is the one who's going to get the work. If you're comfortable with that, here's my email. Yep. No agent so far has said no. In life, in YouTube land, a lot of people have pounced on me and said, I would never do that. Well, in the real world, agents are happy to do minimal work for possible greatest gain.
That's right. It's return on your time invested.
Yep. And I'm going to burn through these, and we'll be wrapping this up here.
I got a seller finance deal I'm working on. Chop, chop. Or I'll just split.
You can take off anytime you want. I appreciate you stopping in. My Sundays are rough. I'm trying to switch my Sunday things to Saturdays so I can jump in on yours.
All good. I'm going to hop out because I got a seller financing deal that I just.
Awesome. Thank you so much for hanging out, Matt. I'm going to go through the rest of these questions. All right, I will see you Thursday.
Absolutely. See you then, pal. Okay. Bye, guys.
EG, howdy. Any advice on addressing jumps in market value assessment and its impact on annual taxes? I've seen letters for 2023 tax-based adjustments, and it throws a wrench in the expected returns. So the very beginning of this video, the content today was the biggest mistakes when setting rents, the biggest mistake. A lot of people think that your expenses set the rents, and that's not really true. Area average rents set your rents. That wasn't the biggest mistake. The biggest mistake was thinking you shouldn't raise your rents unless your expenses increase. And people are always naming things like property taxes or insurance and ignoring the fact that inflation is a thing. Your handyman's going to cost more, your contractor is going to cost more, your cost of materials is going to cost more, and taxes and insurance are going to go up. What's happening with your area average rents? That's a big impact. And a lot of people make the mistake when they're looking at a property to buy it. They look at the MLS listing and they say property taxes are $4,000 a year. Okay, so I run my calculations and I buy it 3 or 4 times what somebody paid for it 5 years ago. And next year, your property taxes go up the maximum amount allowable by your county, throwing off your numbers. So calculate that into your rents, calculate it into your cost to acquire, your what is your profit going to be to make sure the deal's worth pursuing, expecting those rent increases. There are things like Prop 13 in California where the rents can only increase once when you purchase, and then as long as you own it, they're not supposed to increase again. Washington State and Texas, it's every year they're relooked at. You can go argue them, but you have to find comps that make sense, and it's going to be hard to find comps that make sense in a market where prices keep going up. It sucks for the renter. Tenants pay property taxes, and that's going to impact rents. So if you're one of those people who's trying to be very kind to your tenants, not raising rents, you'll quickly fall behind. Sometimes it takes the binder method to say, hey, look, here's what's happening to rents because of property taxes and insurance, which tenants don't care about your expenses. My proof that they don't care about expenses was talked about at the beginning of this video as well. And here's that proof. People say, don't raise your rents unless your expenses go up, which means they're justifying a rent increase if your cost goes up. So if taxes go up in 2023, that person would say you should raise your tax, you should raise your rent, but you shouldn't raise your rent unless your cost goes up. Here's where that is a mistake. If you buy a rental and you own it long enough to pay off the mortgage, You have a 15-year mortgage, 30-year mortgage, 40-year mortgage, you make that last payment. Do you immediately call your tenant and say, hey, we're going to lower your rent by $1,000 a month because I no longer have a mortgage on this property? Your expenses don't set rents. They don't make them go up. They don't make them go down. In order to make a profit, they might need to go up, but that doesn't set them. Area average rents set rents. Watch what's happening with rents in your area. And it does throw a wrench in. Larry, howdy, Larry, how are you? Flip-flops. One says work. The other one says, but not today. Be great. I can put my feet down there. People can walk around on my face. I like it. Elise, fire me, please. Howdy. Matt, no pressure. Just retire when you are ready. But we know it's soon. We actually do know he's getting closer and closer every day. Chester to Tom, thank you. I forgot Dan and David both did videos. Chester, here trying to get a small child to take Motrin to bring down a high fever, and he's feisty. Smush it in peanut butter and jelly on a spoon. Elise, fire me, please. Dion, because of you, I opened up and got my first Section 8 tenant after a couple months and went through the process. Finally got the payout. LA County. Hope smooth sailing from now on. Thank you. Awesome. Please let me know how that goes. That's really cool. Train like gods, CPT. Howdy. Great and useful info as usual. Awesome. Thank you. Chester, Dividend Dave, continuing education certification units training expense. Tax lingo that my CPA needs to know. And then Kip jumped in with that super chat, talking about Matt looking normal with a hat. Dividend Dave, I think last summer it hit 114 in Seattle. Entirely possible. I would say I was in Florida, but I was in Florida this spring. Dividend Dave to Chester. I don't know I'd go that far, Chester. Those are pretty specified and new to being set up by educators, Chester. Didn't mean to type your name twice. E.g., thanks, Dion. Chester, all good. I figured, hey, outside shot, but I figured the worst that can happen is it's simply disallowed, and it's $2. Thank you, Dion. Please pass along our thanks to Matt. I will do that. And just as I'm wrapping up here, if anybody's curious, the reason that I read every comment is because at some point, when I'm not as lazy as I am, my plan to take my live streams and release them on a podcast. And also some people that watch YouTube are like me, pay for premium and watch with the app closed so that I can just listen while I'm doing whatever. So I might not actually be looking at the screen. So I always want to read each comment. So file that away. In the future, if you want me to say something stupid on a video, putting it in a comment would probably make that happen. Because I process the sentence after the words have come out. I want to appreciate every super chat that came in today. Thank you, everybody. It's greatly appreciated. I hope this made you think. I appreciate each question. There are some questions that came up today. The three amigos will be doing a video on biggest failure in investing. And then I will be doing a standalone video on how many houses it takes to reach financial independence. Thank you for that question, Matt. There will be three amigos videos on Thursday. I will probably be doing a slides video on Thursday. And Michael Zuber does a live stream Saturday mornings, 8:30 Pacific. Matt the Lumberjack Landlord does, 8 a.m. Pacific. Zuber does it on Saturday. Matt the Lumberjack Landlord does it Sundays at 8:30. And I will be back again next Tuesday to answer questions. It might be a shorter live, no. I thought it was going to be the day of the Tacoma Phi meetup, but that's been moved to Wednesday. So I will see you all next week, Tuesday, 4 p.m. Pacific. Until my next video, thanks for coming to my Dion Talk.